All right, there we go. Everything looking good. We are live. Go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on 7/20/2022. And obviously, as always, before we get started, I'd like to remind you this is not financial advice. I am not your financial advisor. These markets are extremely volatile. Please do your own research and, of course, trade responsibly. What's up, Angel? Good to see you. Hello, hello. Calma Betty. Waroop, waroop. I'm assuming you meant what's up. I don't know. Arturo said, let's kick it. Let's kick it indeed, my friend. Obviously, as always, make sure you guys smash up those like buttons. And let's jump right in. Lots of action. Let's go ahead and we want to do our regular rundown, or do we want to start with crypto right now? Let's actually just start with crypto today. I want to talk about what's going on just because of the current price action and probably the most relevant over the stream. I'm not necessarily expecting like some big move in the next couple hours, but it's the most relevant as traditional markets can be closed till tomorrow anyway. So let's jump in and discuss it, and then that way, if the move does happen one direction or the other, that's fine. If not, we've already laid out the situation. So Bitcoin futures, looking at the futures chart right here, currently at 23,285. We see we have the daily bull cross between the 8 and 21. So we had a big push up yesterday. And then the close that just happened was basically just sideways flat, just a neutral candle. And now this one has started right off just with some selling pressure over the last, couple minutes. We don't know what's going to happen here, obviously. Oftentimes, though, when we get an 821 cross like this, we're flipping from what was a bear trend back here in April. April 7th, we flipped bearish on the daily CME chart at 44,500. So here we are now, July 20th. So months have gone by. The Bitcoin price is 23,250. So the price has been cut in half. And now we're flipping back bullish. So, regardless of our macro view, bullish or bearish, or where we think Bitcoin's going long term from here, or really long term from here, this is why we've been saying don't get bearish at the bottom, and why we were looking at that bullish divergence and looking for all these bullish trades to the upside. Even though I wasn't macro bullish, this is actually, and we'll see it on the next chart. When we go to the Bitcoin spot chart, we're going to look back at the same chart I've been showing off for months after months, arguably a year at this point in time. Since before Bitcoin put in its second higher high at 70K, I've had the same chart, and hypothesis for where Bitcoin might go. And when we get there, we'll see Bitcoin's literally doing exactly what we planned out. So we don't know exactly what's going to happen next, but we have a pretty good idea. If it tops out where we think, we know it's probably going lower, and we have targets for that. And if it keeps running past where we think, that's fine. And we're just confirming back into a macro bull trend, which either way is acceptable. But we have two big targets to the upside right now, and then obviously a series of targets to the downside, assuming we don't break trend, which in this case, trend is obviously to the downside. But as far as I'm concerned on the crypto market, as far as I'm concerned on the stock market, all that's happening right now is we're getting that retest. The one we've been discussing with, essentially, we have gone from our, looking at our longer time frames, leading up to the monthly close, we were discussing this move ahead of time before that one, and then leading up to the quarter and the half close, we were discussing why this big candle in advance, we were able to identify this was going to just basically be a quick shot down because it's just an air pocket. There was no price action essentially between 20 and 30,000. So obviously we shot straight through 30,000, but as we were getting ready to close last month, we were discussing how from here we should expect at least like a 50% bounce or something close to that of the candle back down before we see continuation of the downside, or potentially, break the trend and go bullish again. Either way, we should see at least some kind of bounce at that level, especially because it lined up perfectly that it was not only, all of our time frames closing, the monthly, the quarterly, and the half as well. So there's a lot of opportunity for people to lock in gains, lock in losses, rebalance, all kinds of different stuff going on. So that being said, that's why we were so bullish right here at the bottom after this big nasty candle, just for some scalp plays, and then we'll see what happens after that. So that being said, on the monthly, still very bearish. We've confirmed into the monthly. We have, hard sell signal and have for some time now. We obviously have bearish divergence on the monthly between the two peaks on Bitcoin. And obviously we have month after month after month, almost, 7 or 8 months now of red histograms. So very, very bearish on the monthly. Now, that being said, we don't have a CME monthly 200 moving average, really any 200 moving average on the monthly for that matter. So we know overall the trend is always bullish. CME chart doesn't have enough history. So when we go over to the spot Bitcoin chart, we can have a better idea on the weekly and monthly. Now, that being said, weekly, we're still underneath the 200 exponential and simple. And we know normally what happens is we would bounce support, get some kind of move back up. And then if that fails, we go lower, lose the 200 exponential and simple. And then we can see what happens from there. In this case, we broke straight through it. And now we're just back testing it. So we just skipped the initial bounce off of it and then lower high. And then we broke through it, and now we're back testing it. So essentially, we just skipped a step right here as far as I'm concerned. But now we're below it, so we would expect that area to act as support. It didn't act as support, so now we just see, is it going to act as resistance? And to tell you the truth right now, anybody's guessing, because essentially, when we're at the 200 exponential or simple moving average, that's fair value. Based on our last, we're on the weekly time frame, based on our last 200 weeks exponentially calculated, or 200 weeks, just simple calculation, based on that, we're fair value. We're right smack between the two. So, regardless of what direction we go in, it's at this point in time, it's essentially, in my opinion, a coin toss. Now, I still have macro bullish outlook, like years into the future, I'm still bullish on Bitcoin, crypto in general. Months from now, not necessarily. Not necessarily. If you ask me where's crypto going to be 3 months from now, 6 months from now, a year from now, is it going to be higher or lower? I would say that there's a higher than 50% probability that crypto is lower. 3 months, 6 months, 9 months, 12 months from now. Now, that doesn't have to be right. And again, I'm not saying there's a huge, advantage to it being lower. I think it's a 50-50 chance it could go lower or higher, but there's a slight bias because we're going down in the shorter time frames. So I would say, maybe it's closer to a 66-33 on like the 3 month to 1 year time frame. But if you ask me, well, what about on the daily time frame? I'm like, well, it might be, we might be up 3 days from now, but we might be down, like I said, 30, 60, 90 days from now. So that being said, just finishing up the futures chart, and then we're actually going to go in pretty deep on the regular chart, or at least, brush over the deep dive we've done many times. Here, price has been cut in half. We're confirming into a bull market, at least, a bull trend inside this bear market. And we know this happened a couple times right here where we chopped around. But regardless, if it chops up and crosses bullish and then chops back down, we're talking about essentially getting out break even or maybe at a slight loss. It's worth getting chopped up a little bit to catch the big trend. And what is the next trend we're trying to catch? Let's just assume nothing changes and we stay bearish, stay below the 200 exponential and simple with a downward slope. We're at least looking for a back test of support that broke right here around like 28,000. Or possibly even a retest of the 200 exponential or simple on the daily, somewhere around like, 35, 40,000. Now, those are pretty broad targets, and we don't know exactly where we're going to go. That's just based on the futures chart and how it looks. But we're going to go over to the spot chart now and talk a little more in detail and look at some fibs and whatnot. That being said, though, we do really want to watch out here. We had a big knife stab up right here as this rolled over, and that marked basically the top. So we saw obviously a little bit of divergence between these two knife stabs, and then that marked, bearish divergence. That marked the top. We rolled over, didn't actually cross the 8 and 21 to the upside, bullish, the green cross right here. Here we crossed it already. We have a very similar setup, especially on the spot market, not quite as much here, but we see a bunch of green histograms trending up above the slope line, approaching the zero line. We flipped it bullish, but we have this big old knife stab right here. So we got to be real careful. The hard buy looks good. The cross looks good. Everything looks good, except for we used a ton of energy, and now the momentum is fading. So we need to see what happens right here. Typically, what we would expect to happen is a retest of the 821, somewhere around like 22,1, 22,250. Let's say just 22,000, give or take. When we come back down there, then the market decides, are we bullish and we're going to move back up, close this gap maybe, or shoot some of the other targets? Or are we going to get rejected and actually just cross straight back down to the downside and then retest the lows? Either one could happen. Either one could happen. And we're going to switch over to the spot market chart now. And then I'm actually going to do something I don't normally do, but have been doing a little more lately. I'm going to go down to the 4-hour chart, and we're going to talk about what's going on here on the 4-hour chart and why I'm looking at this one. Because I don't often look at super short time frames for making trades. I mean, I tell you the truth, I keep open almost always like the 15-minute, the hourly, the 4-hour, and the daily chart all at once. And what I look for is confluence between these charts. If I look at the longest chart that I'm looking at, for instance, the daily based on a trade setup I'm looking at or whatever, I'm looking to see is the daily in a bull market. And I have a very easy way to determine if the trend is bullish or bearish. Obviously, it's literally what's coded into the TJD Master, which is the group exclusive indicator. All it is basically when we're below the 200 exponential, when we're below the 200 simple, and the slope of those respectively flip bearish, which means they have a negative slope, they're going down, they turn, pink and red respectively. You guys know that's it. I coded it into an indicator, and that's my strategy. It's not that complicated. There's a bunch more steps to it, but everything is essentially built on the foundation of the 200 exponential and simple moving average. So here on the daily, or the 4-hour rather, when we look at this, we see when it crossed down here, again, was around 42,000. We confirmed into a bear market after chopping around a little bit. We confirmed back bearish here. We back test it, the reversion to the mean play as it flips bearish. And then since then, we just gave up. And it, again, around 42,000. Now we're at around 23,000. So it's basically been cut in half, 50%. And now what we're doing is we're confirming back on top of the 200 exponential and 200 simple, and they both have a positive slope line. So now what I would expect is the same way we back test, and then here we actually get rejected and go lower. I would expect here we flip bullish and then a back test, and then it's up to the market what happens. I don't know if the market's going to say, hey, this is support now, we're going much higher, or if the market's just going to say, haha, psych, nobody's buying, I'm getting F out of here, and then we go lower, and this just breaks back down, and it's chop on the 4-hour. Either one could happen. But the strategy tells me that no matter how I feel inside my heart or inside my mind, or the little tingly feeling I get, below the waist, none of that has anything to do with what determines whether or not I enter into a trade or not. What determines entering into a trade is a strategy. And to make it super simple, so you're never like, oh, I don't know because of this and the fundamentals, and it's just coded into the indicator, so it's just nice and simple. Now, there's still going to be times like this where it flips bullish right here and then immediately goes bearish, and you're like, oh God, I got to get back out. Like, no, you don't act like that. You don't respond like that. You still use this strategy plus trade setups, clear invalidation points, targets, etc. And then that way we can, essentially stick to our predetermined method of trading. And then obviously we use, momentum and the knife stabs and divergence and Fibonacci's and all this other stuff. But it's all built on essentially the first part of the whole strategy is, hey, what's the trend? So here we have a bearish trend on the 4-hour and we're flipping bullish. So that tells me, hey, we're looking for potential short to medium term. And when I say short to medium term, I mean like not investments like with 10-year time horizons. I'm talking about like short to medium term, like, hey, I'm on the 4-hour. I'm looking to take some scalp trades that may last a couple of days or a couple of months. And sometimes a beautifully placed scalp trade will end up, turning into a position as you continually add to it and shift into a longer term position. That's ideally what we're doing without trying to pick bottoms, without dollar cost averaging into downtrends, etc. We have successful trades that turn into positions rather than, underwater positions turn into underwater positions, turn into underwater positions, turn into hopefully someday we get back to all-time highs. Not going to fucking do that. I don't play that game. And you shouldn't either. Obviously, it's not financial advice. You can do whatever you want. But, based on my experience and the experience of, thousands of other people, that's not ideal situation. So that being said, now, if you're not going to look at a chart and you just want to invest over like the next 50 years and you don't give a shit about the swings, you don't care, by all means, dollar cost average into whatever you want. Uptrends, downtrends, sideways trends, it doesn't matter. But if you're trying to learn how to actually trade and take advantage of the swings in the market, that's what all of this is about. So that being said, we're confirming into a 4-hour trend. So I'm bullish now. Now we were already scalping off of some of the like various different time frames and lows and everything. So we're already getting involved in some trades. To tell you the truth, I actually wasn't involved in nearly as much of a Bitcoin trade as I was in an Ethereum trade. And we discussed that obviously multiple times stream after stream after stream, talking about how I wasn't necessarily bullish on crypto, but we're hitting key targets. And while the Bitcoin chart is not the most beautiful, the Ethereum chart is textbook and absolutely beautiful. And this actually led all the rest of crypto by a few days. So what we were able to do actually with the Ethereum chart was take advantage of not only the range we were trading in, buying support, selling resistance, but able to take advantage of, this big move to the upside. And Ethereum has basically outperformed any of the other trades that we were looking at. So I actually took some profits at this yellow descending resistance and some shorter term fibs and a bunch of other stuff slightly off the highs. Now, granted, it kept running and I was thinking, man, I might have jumped the gun on that, but I would always prefer to lock in those gains ahead of time, especially when the rest of crypto hasn't moved. So then we can take that position, take those gains and move that into something else. And we were talking about it in the group, how there was basically, it was time for crypto musical chairs, where ETH moved first and moved the most. Now it's time to get the hell out of there and then move into the other stuff so we can capture that move as well. Now, in this case, the alts weren't moving nearly as much at first. Then Bitcoin started moving after Ethereum. Then it spread out into the altcoins. So we've been able to take advantage of a lot of these positions also while taking advantage of some of the stock market trades. But that being said, we got out of this. Now it's back down around where we sold ETH. Now, I'm not convinced that the trade setup doesn't play out. I mean, there's still some meat on the bone right here. We essentially had like about 66% of the trade play out for a 76% trade. So, we're about 50% in profit on that position already. So could it go the rest of the way? Sure. But is there better opportunity in some of the other cryptos right now, or more likelihood or probability of success? I mean, I think so. That's why I locked in those gains. Now, it doesn't mean I won't get back into the Ethereum trade. But that being said, now we're looking at the Bitcoin chart and saying, okay, Ethereum did a bunch of stuff that Bitcoin hadn't done yet. It led us out of this like downtrend basically. So now what is Bitcoin telling us and how are we positioned for this? So now if we switch back over to our longer time frames, we know the 4 hours confirming into a bull trend. So here's our daily though. And obviously we're very much still in a bear trend. I mean, the 200 exponential is still, essentially flat or accelerating away from the 200 simple, which means the trend is basically still as strong or strengthening to the downside right now. So that being said, we don't want to just assume this is going to be the macro bottom, but we know if the 4 hours confirm into a bull trend, the next thing that can happen, is we got to move up. If we want the daily to confirm into a bull trend, we know it has to happen. We have to get above the 200 exponential and simple, and then we have to stay on top of them long enough for them to flip over, blue accordingly. So that's a ways away from where we're at right now. That's 34K roughly. So that's our real target to the upside if this is going to go bullish. We could come all the way up here. We could get rejected and then go bearish. It's still a beautiful trade. We could come all the way up there. We could take profits, go sideways, and then we could re-enter the trade with more confidence after we confirm bullish on the daily. And then we'll start paying attention to the weekly and just work up the time frames essentially. Now, that being said, we know also there's underperformance probability. So it's obviously a bear trend on the daily. So we know the likelihood of the move to the upside underperforming is high, because typically what happens is when you're in a bull trend, you overperform moves to the upside. When you're in a bear trend, you overperform moves to the downside. And then when you're in a bull trend, you underperform moves back down because everyone's buying the dip. So it doesn't dip as much as you want it to. And the same thing with when it's going down, it doesn't go up as much as you want it to because so many people are selling the rip. They're selling into it. So it doesn't have the strength to hit some of those technical targets or the more bullish targets. So that being said, now we have the daily obviously is in a bear trend. We saw a bullish divergence. We're taking advantage of that, looking for essentially the scalp move back up to like 28K to retest that resistance, and then slightly higher up here to like 34K to basically reclaim the trend and flip back bullish, or potentially just reversion to the mean and get rejected. Either way. Now we know we're building up strength here. We know we have the daily knife stabs are rather alarmingly high, but there's not like bearish divergence or anything, which is okay. That's good. So then when we flip out to the weekly, we say, okay, what about the weekly? Well, technically the weekly is still in a bull trend. I mean, even though we're underneath the 200 exponential and the 200 simple, the 200 simple never flipped bearish. And back here, even though we didn't break below it back in 2018, it never flipped bearish. We found support perfectly on it. Here we overshot, but we were talking about how this could potentially be the best buying opportunity of a lifetime off of or below the 200 simple. I mean, it's literally the best opportunity ever in Bitcoin's history. Because we've never closed below 200 simple before, with the exception of literally that Rona close, and then we immediately reclaimed it. Now, again, though, we didn't want to presume this is going to be the bottom, and I still don't presume it's going to be the bottom. I assume this is going to be another dead cat bounce, and it's doing exactly what we said. We're back testing now the 200 simple and then potentially 200 exponential. And when we look at the futures chart, we see the same thing happening, but because of the weekend price action, they're slightly off from each other. So the problem is right now is sometimes one will be more bullish than the other, or one will be more bearish than the other. And they're telling us two different stories. One is saying, hey, we're back in a bull market on the 4 hour. And the other one's saying, well, not quite yet. So I want them to agree. That's that confluence. That's why we look at all these different things to try to give us as many like ways to look at the same problem, as many possible ways to find a solution. And the solution is basically just the breadcrumbs of the market. And hey, which way are we about to go? And can we get a slight advantage on it? And can we find a favorable, risk reward setup? And then obviously, can we, allocate a correct position size to take advantage of it? And if we do all those things correctly and we do them enough times in a row with just a slight advantage, we make money over time. And that's what it's all about. Obviously, none of this is financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research and trade responsibly. So we're trying to reclaim these levels. And we know if we get all the way back up to 27, 28K, which is our initial target, we have reclaimed the 200 exponential. So if we're back on top of it for long enough, the 200 simple never flips bearish. The 200 exponential eventually flips bullish. If we stay on top of it for long enough, we go back to the upside, and then it starts looking like a situation, like one of these, where we basically carve out a bottom. Maybe it takes a couple months. Maybe we come back down. We push up here. We come back down, retest it. It goes sideways. It has another fake out down, comes back up, goes sideways. Eventually, we move up to 38K, and then boom, we're back in a bull market, and then off to the races again. Now, that's not my base case, obviously, but that's a possibility. That's the bull case of what could happen. 2 green histograms, still in the bullish controls, or bearish control zone. I'm sorry. We see the knife is now above both of the stochastics. That's one of the first signs, obviously, of when we start seeing aggressive moves. Here we have the blue stochastic on the bottom, the purple or pink stochastic on top, and then here the knife stabs through them back to the upside. It's the beginning of a reversal as we leave the bullish control zone. Then we get the hard buy at the cross, and then obviously we go into in this case, it wasn't that great of an uptrend. But it's like still another 100%. It's the pullback from 30K back to 70K, new all-time high. So that being said, we're looking for something potentially similar to happen. Now here it underperformed, obviously. Here it was a nice performance, but we see that's just one of the steps. Same thing with the 2 green histograms. We have 2 green histograms. Once that closes on the weekly, then we say, okay, now we have 2 green histograms. We're above the 8. Now we're looking to retouch the 21. Once we cross above that, blah, 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 blah. Same thing over and over and over again, just on different time frames. And then when we look at the monthly, obviously we see the monthly is in a bear trend. We don't have 200 exponential moving average or 200 simple moving average. So we know in a long enough time frame, this is obviously a bull trend. All it does is go up and to the right. So if there was a 200 exponential or simple monthly moving average, we know we would be above it. So that being said, this 821 cross the downside is all we really have on the monthly, and that is obviously bearish. But what we've been talking about is whenever we got this cross to the downside, that was the bottom of the bear market. So is there potential that the bottom is already in and we never go lower? Yes, 100%, as discussed. And will we have just luckily basically bought the absolute bottom? Sure, but it wasn't meant to be like hey, I just went all in at the bottom. It was meant to be a scalp, and then the scalp turns into a swing, and then the swing turns into a position, and then the position turns into retirement, or hookers and blow, whatever it is you're shooting for. You aim small, miss small. You know what they say. So that being said, either one of those situations could happen right now. We could be getting ready to go much, much lower and do more damage than we've ever seen to the Bitcoin chart, or the bottom's already in. We don't know, and we won't know for a while, honestly. So that being said, let's go all the way back to our daily now. No, you know what? Let's just look at the weekly, and then we're gonna turn on the drawing tools, and now just only open one eye at first, kind of shield yourself, and then just let it all sink in, because obviously it's a lot going on. But here goes. So this is obviously the Bitcoin chart I have had and have redrawn in various videos on the streams and everything for you guys. This has been my base case scenario, for, literally at this point in time, months, years, I guess. So from before we put in the fifth wave right here, and then obviously our higher high, which is, in my opinion, just part of the correction for that expanded flat. This is the chart we've been using. And now let's see how everything has played out. Obviously, we see the macro wave 1, the macro wave 3, the macro wave 5, and then we see the double top, macro topping pattern. Obviously, previously we had seen blow off tops at that 4-year, mark. This came in slightly ahead of the 4-year mark right here. And instead of seeing a single blow off top, we saw a double top right here. And that, in my opinion, was the beginning of that expanded Elliott wave flat correction. So we had our target obviously for that correction, partially based on the fact that we had the Fibonacci extension from here to here, gave us up to the 1.618, and we fell actually like just shy of it. And I know how much the market likes to hit its targets exactly, because I'm the same way too. So the fact of the matter is, you know, it looked obvious what was going to happen. So now we know in hindsight, I was right, you know. So congratulations to myself. I'll pat myself on the back for you guys. That being said, who gives a shit? Because all we care about really is the future. I mean, it's great to look at the past and say, oh, we did such a great job. Look at all the money we made. But who gives a shit? Because we're worried about the next trade, not the last one. The last one is for bragging rights. That's fine. The next one is all that matters now. So what are we looking at right here? I mean, I'm sure you can't tell because there's like 1,000 different drawing tools on here. But essentially what we're looking at is the macro top. And then we have the A, we have the B, and then we're in the process of the C correction right now. And we have talked about our targets for the C was somewhere in between the 1.5 and the 1.618 Fibonacci extension, which we nailed. You know, that was from the high to low one. We nailed that, and that was our target for the bottom of the 3. So this has been on the chart drawn here literally for months in advance. This target right here, this green box. And when we came down here, we hit it perfectly in between the 1.5 and 1.618. That being said, the next move we would expect is a back test of those moving averages, which is obviously what we're doing right now. But now we have a couple of Fibonacci's that we want to pay attention to. This is what I'm watching on the shorter time frames. We have already come back up to this 236 fib from the previous move back up, the high at 48,000 to the low right here, which came all the way down to like, you know, slightly under 18,000, 17.6 or whatever. So that's our fib right here in blue. So the target for this fib is essentially just, hey, how much of this move down, which we're calling the 2, how much of this move are we going to give back, which the move was to the downside. So when we give it back, we would be going back to the upside before we continue lower. That's what we're assuming is going to happen. We don't know for sure. Maybe the bottom is already in, etc. But I mean, let's be real. The market has been acting like our little bitch. We basically drew a path for the market, and then the market was like, yes, I will gladly go down your path, exactly as predicted, as planned out. But we know at any point in time, the market can diverge from that path, and we can be wrong, and we have to be able to readjust. So we obviously have invalidation levels set up the whole time along the way. So that being said, how can we figure out how much this is going to go? Well, we can say, oh, well, it's going to have a shallow retrace before it goes lower because crypto's trash and the Fed. So maybe it goes to the 382. It can do a Charles Dow theory. 50% of the move down, it comes back up and then it goes lower. Sure. It can have a bullish, retrace, which in this case would be a deeper retrace because the move down is the move. The retracement is of that move. So a bullish retrace would be a higher percentage. So 61.8% move. And there's targets along the way, various other things that would tell it to stop. Like the 382 obviously lines up with the 200 exponential. So maybe that's what rejects it. And then we go sideways. So it's like, oh, it got rejected by the fib. It got rejected by the moving average. It got rejected by the other macro fib that I haven't even shown yet. We don't know. There's a case for any of it. And that's why, show me the chart. I'll tell you the news. We see it getting rejected in an area. And then the next day people will be like, why did Bitcoin go down? Why did it top out? And it's like, oh, because it got banned over here, because whatever. I don't even need to look at the news. We can look at the chart. And then afterwards, when you're like, oh man, how did you know we were going to go down? You must have had insider information. No, the chart is the insider information. It always says it ahead of time. And then afterwards, people go look for the news to try to figure out why it happened. But nobody ever acknowledges that the technicals are why it happened. Obviously, there's enough people looking at the same thing. So that being said, we're in the middle of this bounce right here. We're trying to figure out how much is it going to bounce back up. So how can we do that? Well, let's gauge our last bounce. Let's see what the last one did. So if we go from this macro top right here at 70K, and this is obviously our 1 of the C, and then we just go to the low right here. So our high is 70K, our low is 33K, and then we just kind of extend that out. And again, you're not going to be able to tell what's going on here. I can barely tell what's going on here, and I made this. So that being said, how much was the bounce on this white fib right here? Oh, look, it's exactly to the 0.5. Perfectly, beautifully, as if somebody else is doing the same thing we're doing. Or maybe I'm just the biggest Bitcoin holder in the whole world. I'm Satoshi, and I'm moving markets. But, the truth is, obviously, I'm not Satoshi. So I guess other people are doing technical analysis. So that being said, we get rid of that fib so that there's one less thing to cloud up our chart. And then we look back at this one and we see this blue fib right here. The 618 is our target at 32.7. The 0.5, which is what it did last time, is 29,095. And then the 382 obviously is 25,700. So we're looking at those saying, okay, seems like those are pretty good targets. I mean, most likely what's going to happen? Well, we shoot through the 200 exponent, shoot through the weekly, shoot through the weekly 200 simple, come up here to the 200 exponential, and then potentially top out all the way at the 21. It's possible. That's the 30K level. We see a lot of confluence around these levels. Maybe we overshoot, maybe we undershoot. We'll see what happens when we get there. That's why we don't want to have this box right here. So once we get into the box, we're saying, okay, this is the area we're likely to get rejected. Now, normally the box isn't from 26,000 to 32,000. It's not normally a $4,000 range, but you know, that's the safest way to do it, is to pay attention to what could happen and then look at those areas. Here we'll take some profits. Here we'll take a decent amount of profits. You know, here we're looking to close our position. And then if it keeps running to the upside, we can easily re-enter with higher probability of success with even larger positions if we want, slightly higher. And you're like, but wait a minute, you'd be buying Bitcoin slightly higher than what you sold it at, so you would get less Bitcoin. Sure, but I don't give a shit about Bitcoin. I don't give a shit about any cryptos. I don't care about Apple stock. I don't care about Amazon. I don't care about any of that shit. Because I don't pay my bills in Bitcoin. I don't pay my bills in Amazon stock. I don't care. I want to make money. So people are like, oh, I can never buy higher. I'll just wait till it comes back down. And then it never comes down. 20 years later, they're like, oh, I just sat out of the stock market for 20 years because I was too stubborn to just buy when it was clearly back in an uptrend. I mean, that's stupid as fuck. But literally, there's like thousands of people, hundreds of thousands of people that think like that. And I mean, it's natural to think like that. Because you're like, oh, I used to have 10 Bitcoin and now I can only afford 7. No, I'll wait till it comes back down. I'm not going to end up with less Bitcoin. But who really gives a shit? Like, are you telling people, hey, guess how many Bitcoin I have? No, I don't tell people shit. The last thing I want people to know is how much Bitcoin I have. So, I mean, the whole idea of it is just like a mental block that you have to get rid of. So that being said, we also have, as if we didn't have enough stuff on this chart already, we have some shorter time frame stuff going on as well that is of note or noteworthy or worth at least paying attention to for now. So let me go back down to our shorter time frames here, and then we're going to talk about how this could likely play out for the longer time frames. So the same way that we did the blue fib from the top right here at 48,000 to the swing low down here, we also want one from this recent capitulation as well. So on shorter time frames, that 32,370 level, we're just going to do the exact same thing. So we're just going to put a swing high right there, take it down to our swing low right here. And then again, we're going to pay attention to these fib levels. So again, that's in white right here. So we see we hit the bottom right here. We immediately back tested the 236, almost got up to the 382, came back down. Each time we put in a low, a higher low, then a higher low. We started building bullish divergence off of these as well. So things were looking good. We're putting in higher lows. We're putting in higher highs. We eventually take out this high right here. We break out of essentially what was a sideways, channel on ETH. A little less pretty on Bitcoin, but arguably, some kind of bearish pattern that would typically consolidate in an upwards fashion and then break down. But instead, we obviously had slightly more bullish pattern, maybe a ascending triangle. I don't know, whatever you want to look at it, what time frame you're looking at. Essentially, what happened was we broke out to the upside, which that's great. That's exactly what you want to see happen. As soon as we break through that 382, which was a previous level, we would assume we're going to come up to the 0.5. Which we did. We came up to a 0.5 beautifully. That was great. And then now we're consolidating. So what do we expect to happen right here? Well, if we go up to the upside, we expect to hit that 618 in white right here. If we go back to the downside, we expect to retest the breakout, which was the resistance and the 382. And then if we just zoom out a tiny bit as well, we see the white fibs, the 382 lines up with the blue fib, the 236. The 0.5 where we just topped out is in the middle of nowhere. There's nothing really there. And then we know the 618 lines up almost perfectly with the 382, which is the beginning of our macro targets to the upside. So what is likely to happen right now? I mean, we don't really know. My base case and what I've been talking about in the group, obviously, and essentially what I'm looking for right here doesn't have to happen. I could be completely wrong. But what I'm looking for right here is this to play out. And I'm looking to be a buyer of support based on that 4-hour time frame. I was looking for us to come up here to the 0.5, which we did. We topped out. That's your take profit area. And then we come back down, back test the 382, which was also the breakout, the top of the triangle or horizontal or whatever. That's also our macro 236 from the bottom. So we basically confirm this fib is valid, you know, higher low, breakout, back test of the 236 and the 382. That's what I'm looking for. And then after that, I want to see, obviously, that area holds, we back test it, and then we get to move back to the upside. So my next target is to shoot straight through the 0.5 because we already took that one out. So if we're just going to go, it makes sense we're going to a new higher fib. So the next one would be the 618 in white or that macro 382, which again, I would expect something similar to happen, you know, where basically, hey, it looks like we might have topped out right here. We get some kind of pullback. Maybe we back test the 0.5, you know, maybe not. I don't know what's going to happen, but that's what I'm looking for to happen. At which point in time, then we would look for our next target to upside, which is either the white 786 or arguably the blue 0.5 right here, which is our second target to the upside. And then obviously, you know, the most bullish case scenario, we maybe come back, get another back test, and then we get that final push back up to the 618. And now is there an even more bullish situation than this? Sure, we break out and we go to the upside and we invalidate the rest of my setup. And, you know, we've been right about everything basically from like back in here. So we've been right for this whole entire time for literally years on what Bitcoin was going to do. And then we would be wrong. That's okay. That's okay. We can be wrong. Matter of fact, statistically speaking, we should have been wrong a bunch of times already. Like, we're just getting really lucky because whoever is in charge of Bitcoin, whoever's pulling all the strings, you know, market makers, whales, whatever, is literally using the same strategy we are. And it's not like we just went out and learned the strategy of the market makers and we figured it out and like decoded the, no, this was already in our tool belt. We were already doing this shit. So then we're like, oh, you're doing that. Oh, great. That means it's going to work even better. But that's what it's really all about. I mean, not every strategy or every bit of technical analysis we do works all the time, but right now it's all working almost all the time. So that being said, we have a path forward. Now, at any point in time along the way towards this bullish path, we can diverge from the path and that's it. Say we just topped out right here and we just go lower and it just fades, you know, and breaks down. That's completely fine. That is completely fine. And then we have to look at this 5-wave structure that we're essentially building right now. Hey, you know, does that invalidate the structure? Is that deep enough of a retrace? You know, et cetera, et cetera. So that being said, what are the invalidation points for our strategy right now and what we're looking at in the future? Well, we know already, if we overshoot the 618 right here, we know on the macro, on longer time frames, we have basically a 1 down for the retracement and then a 2 back up, which is the 50% retracement. And then we have a 3 down and then we're looking for the 4 back up, which we theoretically have already started. I think it's pretty clear that's what's going on here as expected, which is great. But now we don't know where that's going to go. So if it tops out shallow, that's fine, doesn't change anything. If it tops out at the 0.5, that's fine, doesn't change anything. If it tops out all the way up here at the 618, that's fine, it doesn't change anything, but it's tagging the 1 now. And we know that the 4 cannot go into the 1. It can't retrace, which in this case, the retrace is up because the trend is down. It can't retrace inside of the 1 on more than a wick in highly leveraged markets on longer time frames. So like in this case, a daily or a weekly, obviously crypto is very highly leveraged. And that's just one of the rules of Elliott Wave. So we know if this retracement comes up here and we see like a super deep retracement, we know, okay, wait a minute, that's not good. We just invalidated what we were looking at, which in this case, you're like, well, that's not good. Why? We're going up higher than we thought we were going to, invalidating the bear trend. Well, that's fine, but we don't give a shit about Bitcoin, whether it goes up or down. We just trade it. You know, it's easier when it's going up, obviously, and that's great. We can just all log off and go lay on a beach somewhere, you know, in a bull market, because you can throw your money anywhere and it does fine. Matter of fact, the stupider decisions you make, the better off you do. So you're better off just throwing shit at a wall. But that being said, if we invalidate this right here, then it's like, okay, we invalidated the rest of the retracement and now we're going to go to the upside. So in this case, the invalidation means bullish crypto, likely, possibly, hopefully. But what would invalidate to the downside? Well, if we don't at least get, I mean, the 236 retracement is good. It's okay. It's a start. But we really want to see at least the 382 of the two. So the blue 382 is like the minimum retracement that we should see. There's no reason it shouldn't at least get up to 25,762. Now, that doesn't mean it has to get there, but that's what we're looking for. And then if it breaks to the downside and that's where it topped out, you know, that's completely fine. It is what it is. Underperformed. We wouldn't even be surprised because obviously we expect bull moves in the bear market to underperform. And then that would be our 4. And then we would start looking, you know, deeper for the retracement of the wave 5, which again, we don't know where that's going to be. but we have some targets along the way, obviously. But when we really zoom out and look at what's going on here, that's when we get the macro big picture. Is let's zoom out here a little more. Now, I know obviously the chart is crazy to look at, and now with all these arrows in here, it's probably even worse, but I'm going to leave them just for a second and we'll clean it up. The whole point is that what we're looking for is this 1 down, this 2 retracement, 50%, beautiful. Then the 3 down, retracement, 50%, maybe, we don't know yet. At least the 382, maybe the 618, and then one more leg to the downside. And then that leg to the downside, we have our A correction, we have our B expanded flat, which is a higher retracement. It's not often the 5-wave structure completes, we retrace, and then we put in a higher high. Normally, that's no longer the completion of 5-wave structure. Something was wrong. You were wrong. We're going higher now. Miscounted. Fix it. Adjust. Play the game. But in this case, we were expecting an expanded Elliott wave flat correction, which is where the correction itself of the flat actually puts in a higher high. And it's essentially a failed breakout, a throw over, whatever you want to call it. But regardless, then we have the A, we have the B correction, and now we're in the middle of the C. And then in the C, in the A, we have A, B, C down. Then we have in the B, we have A, B, C up. And then in the C, we have 1, 2, 3, 4, 5 down. And those are all rules for the expanded Elliott wave flat. And then we know also from the top of the flat to the correction of the flat that we're looking for the 1.618, which is the yellow fib right here. The Fibonacci extension of the initial move down, 1.618 times that move down, which takes us, in between the 1.5 and the 1.618, took us to like literally the perfect bottom. So that's great. I mean, this is playing out absolutely beautifully and very technically. So we would expect it to keep playing very technically, because whoever's moving the market is doing it according to the same stuff we're looking at. So that being said, when we get this next push up right here and then it tops out, we're looking for then a lower low. And in this case, the anticipatory target and the possible bottom, the lowest low for crypto that we might see, maybe, possibly, potentially, is that 14,250 level. And that also is the next big candle down that wipes out the candle up, blow off top, and candle down from 2018 on the monthly. And then just the wick right here from the push up, prior to that Rona dump in like June when we started into the bull run. That would essentially be that extra little just one leg down wiping out that other month. And then maybe that's our bottom. And then obviously we have, a base case, a bear case, etc., where we could potentially go much lower. But we have to just watch and see, as long as what we're doing is working, let's keep doing it 100%. So we've been, and you can go back, if you don't believe me, go back and look at the long-term Bitcoin video that I put up months ago, where I literally called out all of these targets. Even from when we were back up in here, we were already expecting all this to take place. The move up here, we were anticipating these. Now, some of these targets have been adjusted accordingly based on our little boxes from where we touched, etc. We have to move the fibs around a little bit if we get a more shallow or a deeper retrace. But eventually, I mean, when it's all said and done, we basically just have the Bitcoin roadmap, or the technical analysis roadmap, and it's been playing out perfectly. I mean, we have been phenomenally lucky in the sense that all the skills that we use are the same skills that whoever's in charge is using. So that being said, we know where we have targets to the upside. We know where we're at right now. We have a bunch of different fib levels that matter. We have a bunch of different moving averages that matter. We obviously have some key indicator and oscillator stuff going on here as well. We know exact things that have to happen on the 4-hour time frame, the daily time frame, the weekly, the monthly. It's all mapped out. And every time we go to do something, every time we look for a trade target for either a buy or a sell, well, we look to see if the trend is still bullish or bearish. All we do is just look at our checklist and say, okay, so, on the daily, is the 8 crossed above the 21? Check 1, got it. Do we have more than 2 green histograms in a row? Check 2, got it. Are we above the 0 line? Check 3, got it. Do we have blue slope line? Check 4, got it. Do we have the hard buy signal? Are we out of the bearish control zone? Are the Stochs angled to the upside? Is the knife above the stochastics? Got it. Are we inside the bullish control zone? Almost. So we're just checking off boxes to see how bullish we are. And each time we get a little more bullish, we might add a little bit to our position. Or each time we hit one of our targets, we might take a little bit from our position. But essentially, we're just going down the checkbox. We're not doing any real work here. We're just putting in the work to learn it, to develop the strategy. And then after that, we're mechanics. That's all we're doing. We're just machines in here, just, grinding the gears. So that being said, we know what's going on. We know what we're looking for. We have our potential targets to the upside. We know why we're looking for those targets. We know why certain areas are more important because we have levels of confluence, such as the 382 and the 236 here. We know this is a very important level, that 22,250 level, our target to downside. That's where we're looking to add onto our position for continued upside. If that area doesn't hold and we break down, we know, hey, we're probably going to invalidate this push to the upside because we're not making it up to the 382. We know the 0.5, the level we hit, kind of matters, but not really. We know the 618 in white and the 382 in blue. Well, that's a really important level because that's two key fibs lining up, and that's a minimum retrace where we could go down from that our macro would still be performing beautifully. And then obviously we have the 0.5 and the 786. We obviously have the previous high and the 618. So we have some really key levels here in blue that we're watching. We have some little micro levels in here in white that we're watching. And then again, let's zoom out and look at the big picture. Why the hell we have so many lines on here? And it's like, oh man, if you use enough moving averages and you draw enough lines, of course it looks like you know what you're doing because everywhere there's a line. Sure, okay. But we can also remove a bunch of these things and not have them and still do phenomenal technical analysis. The difference is we're breaking it down to a level that is beyond most people's comprehension. And that's the difference between if you're just investing for 10 years from now, or if you're trading, hourly, 4-hour, daily time frames, whatever, scalping. So that being said, when we zoom out here and we really look at it and we keep looking over to the right, because that's the more important fib, here we see the white fibs here. And those white fibs are coming all the way from our bottom, at 3,000 in the last bear market, the bottom of the bear market in 2018, 2019, all the way to the top. And then when we go over here and we look at those fibs and we see how do they line up with the other stuff we're talking about? Well, hang on. What is this right here? The white fib is the 236. And that's obviously a very strong support. That was support on the way up this whole time. And then key support, once we lost that support, that's when we basically capitulated. Well, where's that 236 at? That's at 31,618. That was when we confirmed, okay, the top is in now. Now we're likely to go to the 382. Where's the 382 at? Well, that's 20,000. That was another obvious target based on a bunch of other things. But when you add in the confluence and the macro fib, it's like, well, yeah, of course it was. And then if we bounce back up and get that retest, the bullish retest to 618 is also the back test of the 236. So we capitulated when we broke through the 236. We hit the 382. We found support. We're moving back up, back testing the 236. What happens when we back test support that broke or resistance that broke? Well, usually you back test it. It then becomes the opposite. If it was support, it becomes resistance. If it was resistance, it becomes support. And then continuation in the direction of the predominant trend. So we're going down. We basically max out. We start retracing. We hit the 236, confirm, hey, the top is in. We go lower after that. We hit the 382. We say, okay, let's back test the 236. We get back up to 236, maybe at 32 to 34K. It then acts as resistance, and then we likely go lower. And then when we go lower, then we start looking instead of at the 382, the previous low we got right here, then we look at the 0.5. That's our 14,000, 14.2, whatever level, etc. You don't want to get nitpicky. If we're this correct on things, we don't want to miss trades because of a couple dollars here and there. So we pick 3 points in the box, one at the top, one in the middle, one at the bottom to enter off of, or we enter with part of the position when we get near the area, etc. Last thing you want to do is have beautiful TA and then not get entered into a trade over a couple dollars. And believe you me, I've had it happen with buy and sell orders where I literally missed it by pennies. And then all of a sudden we just go in the complete opposite direction with a purpose. So that being said, we know what we're looking for. We know what can happen. Now, is there a more bullish case of things that happen? Sure. If we continue past the 618, or in this case, the white 236, we'll start looking at the bullish case. Is it possible we go much lower, either right now and we just capitulate, or we come up here and then we go much lower? Sure. And that's fine. We'll look at those things. But before either one of those things is going to happen, all this is going to get invalidated or validated one way or the other. So we literally have just a roadmap laid out for Bitcoin. And it's a choose your own adventure. And every time it gets one of these key levels, which obviously we call, pivots, pivot points, or, SR areas, support resistance. And then we look for that flip. We look for the pivot. Does it flip or does it continue past that level? Does it act as resistance and then breaks through it? Or, does it act as support and then breaks through it, or vice versa? That's all we're looking for. And then each time we get to one of these key levels, it's a choose your own adventure. Like here, when we got to that white 382 and the blue 236, it was a choose your own adventure. Last couple times we got rejected. What's going to happen? Well, Ethereum told us we were probably going to break out. So, we were obviously a little more bullish there. Bullish divergence told us we were probably going to break out, etc. Then we move up. We get to a 0.5. Choose your own adventure. We could have easily just shot through it and went to 618. Instead, we top out here, likely coming back to the 382 and the 236. That's where we're going to buy. When we get there, what happens? Turn the page, because choose your own adventure. Because Bitcoin could just drop straight through there and pick down, or, you know, it could bounce back up to the 0.5 and then 618. And then what is it? Same thing over and over again. Choose your own adventure. Flip the page. And that's all we're doing. I mean, and, you know, we use the moving averages and the indicators and the oscillators to just give us confluence around these key levels. But the fact of the matter is, you know, the roadmap's here. We're just following the roadmap. So that is the deep dive into Bitcoin, how that's been playing out, obviously. We'll rip through these cryptos here. Basically, the key thing we want to look at right here is how have these trade setups played out? Which cryptos moved? And then how much did they move? And was there any way we could tell in advance, hey, we want to be in this crypto and not in that crypto? This crypto looks strong. This crypto looks weak. So if the weak one overperforms, it could do more than the strong one if it just, you know, performs average. But what is the likelihood? The strong one probably, you know, maybe it performs 50% of the time and just goes an average move. But maybe the really, really shitty one, you know, the horse with 3 legs that's on its way to the glue factory, if it doesn't win tonight's race, or even if it does, sure, it might do more, but what's the probability it's going to overperform? What's the probability it's going to perform at all? Well, let's look, because we obviously have been talking about Ethereum and how the setup looked the best. And that was the one that I took advantage of the most. And it played out beautifully. And then we were able to take that same capital and then deploy it into some of the other cryptos, Bitcoin or some of the other trash coins, etc. Or its stock market, whatever. I mean, obviously a bunch of trade setups just blew up this week. A bunch of pot stock blew up, cryptos blew up, semiconductors blew up. I mean, but you could have put money anywhere. The difference is did you make 5% or did you make, you know, 20 or 50%, is if you put it in the right place. And sometimes you don't know. You're not willing to put in the work, or you don't have the time, or you don't have the ability. So you diversify. But that being said, the Ethereum trade has played out the best of the cryptos that I like look at, main cryptos, top 5, top 10, whatever. You know, I'm sure there's something out there like Rocket maybe outperformed it, or like Elon Musk, Shiba Inu, Dojo coin or something like that. Probably did better. But I've never heard of that, so I can't trade that. But that being said, Ethereum performed extremely well. Part of the reason I took profits here was the back test of like this heart line in orange right here. Didn't have to stop right here. Obviously it didn't. It moved on top of it, but we're basically at the area I got out. So now I can say, okay, I locked in my gains. Do I want to get back in right now? Or do I want to wait and see right now? Or do I want to short right now? You know, obviously I don't know. So I haven't done anything with Ethereum. But overall, looks good. We had bullish divergence from these points. We broke out of this sideways channel. We obviously hit some of our targets here. I don't know why I don't have it on this chart. But our, you know, measured move breakout of the channel is just from the bottom of the channel to the top of the channel. And obviously that lined up with this resistance. And that was part of why I took profits. Also was some of the internal retracements on the fibs. If we drew like a million fibs like the Bitcoin fibs and stuff, we would have like internal retracements and all that good stuff. Instead, I just have the macro fib on here. But when we look at the macro fib, here's our top. This was our 236. Obviously key support going back to here with the initial push up. And then when we lost to 236, we capitulated straight to the 382. And that was obviously our target. So then we were looking to enter off of the 382, initially just scalps to play the range. But realistically, we're looking for the push up to 236. And again, I'm not saying I don't think this trade plays out. There's still like 25%, you know, meat on the bone here, or like a third of the trade setup. I just went ahead and took profits just because. I don't know. I mean, just because I felt like it, or I wanted to de-risk, or maybe my position size was slightly bigger than I wanted, so I could have just closed some of it. I don't know. Just decided to at key fib levels. Normally, I wouldn't close my whole position either. Normally, I would close part of my position. Most of the time, I would wait for the majority of the trade setup to play out. I just felt like because ETH had moved so much already, and it had hit some key levels, and the rest of the crypto market wasn't really doing anything, I felt like I could better deploy that capital in other places. And, you know, I got lucky because obviously I was able to. But that being said, here's our daily chart. Let's look at the weekly chart, and then we'll talk about this. Daily chart still looks bullish. Weekly chart, we bounced to 382 on the macro. You can see how clear this is. We bounced to 382. We hit our head multiple times on the 200 simple, and then we come straight up to 200 exponential. That's also part of, you know, where we topped out at and why. So there's quite a bit of resistance around this level that I decided, okay, you know, I'm going to just back off on this and we'll wait and see what happens. Obviously, you can see the weekly 8 right here, the 21 slightly higher. Looks okay on the weekly. Looks like we're trying to carve out a bottom. 2 green histograms. It's a start. It's a start. Curving Stochs back to the upside. Knife on top of the blue and pink Stoch. It's a start. So, but again, I'm not trying to just like sit here and hold dags of Ethereum and just wait for new all-time highs, because I don't think that's what's going to happen. So Bitcoin dominance. So look, I've told you guys multiple times, this has been playing out really, really nicely up until recently. We didn't quite get the move to the upside we expected. We underperformed slightly, but we took out the previous highs. So that was good. Off of triple bullish divergence, we came back down and back tested the breakout, which is what we wanted to see, but then we actually lost it. We broke back down. And then I said my final straw in the sand, or line in the sand, or, whatever the hell the expression is. I think it's line in the sand. My final line in the sand, the bridge I'm willing to die on, is if we lose this upward sloping green line here and we close below it, open below it, and then close below it again, I consider that broken. So that being said, we lost this, what should have been support that was acting as resistance previously. Not good. If we lose this green one, which we kind of already did, but we're back testing now inside the green one, back testing the red as resistance. So if we lose this area, which, we're literally a cunt hair away, I will say, okay, I was wrong. It looks like crypto is going to gain. Trash coins are going to gain against Bitcoin. Bitcoin dominance is going to go down, and I'll be ready for it to come back down here to a new low and, go from there. Maybe even another drive of bullish divergence. I don't know what's going to happen. But that being said, if we break back up here and it's basically like, oh, we broke out, and then it's like, no, we didn't. We couldn't hold it. And then it's like, aha, got you, bitch. And then we go up, and then we test the top of the one, the back tested 200 exponential, simple, etc. That's what I'm looking at. So if we break down from here, I'm wrong, and I admit it, and that's fine, and we'll readjust. If we find support here, then, it was basically the market was like, no, you're wrong, and then it's like, haha, got you, bitch, and then does what you want to do, which is the worst case scenario, is you're right, but then somehow you don't end up in the trade. Or you're wrong, and then, you can't shift your trade setup, or you can't shift your mindset, and you're just unwilling to admit it. That's why I have clear invalidation points, bullishly and bearishly. So the weekly, doing exactly what we said, bouncing at 200 simple. We talked about how this was slightly more bullish than like pretty much any of crypto, including Bitcoin itself, because it held the 200 simple, and then it's back testing the 200 exponential. Our target literally for, the last month while we were down here was obviously 1.7 trillion, and obviously we hit 1.7 trillion. So we get lucky. Again, awesome. Definitely luck is on our side. What's that old expression? Luck favors the well-prepared. I would say that 100% is true in these markets. So back tested. Now what's going to happen? We reclaim this area. We go back in a bull run, whatever. This acts as resistance. We break back down. We go lower, whatever. I don't know. We're in the bearish control zone. Bunch of red histograms. Couple green ones now. At support. Could go either way. We don't know what's going to happen in the future. All we can do is just use the TA. So on to the shit coins. So Avalanche, again, I was trying not to get real bullish on these. I caught myself at the end of that stream putting a bunch of bullish setups on the stream, and then essentially like disclaimer, like, hey, look, I'm still bearish on crypto. Nothing has changed for me, but we have a really nice risk reward scalp opportunity on a lot of these cryptos. So we have to trust it. The 821 starts crossing to the upside on the daily. Regardless, we have to trust it. It's a strategy. So we either use the strategy or we don't. And if we're only going to use the strategy sometimes, we're not going to be able to be consistent. So we're not going to be as successful as somebody that just sticks to the strategy all the time. So that's what we do. Stick to the strategy all the time. So that being said, Avalanche setup, it was really nice. 46% upside. We didn't quite get there, but still like 40% in, what amounted to a few days. Very nice setup, obviously. Played out nicely. We would still expect continuation to the upside. To that 382 on Avalanche, $28. And then realistically, this is the trade setup that should play out. That 50%, Charles Dow theory, 35.71. Arguably, we could see one more trade setup to the upside at 46.23. And obviously that would be a deeper retracement. And that is our third trade setup here. So that is Avalanche. Obviously, all of these cryptos are complete trash until they prove themselves otherwise. But the trade setup on Avalanche was good, which is why we had it there. Solana, this one, and we see Avalanche, obviously, as we're going through here. So we see Ethereum has performed. It has done like 50, 60, whatever % to the upside. We see Avalanche has had, essentially like around 40% to the upside from like the trade setup, breaking through resistance, whatever. So not bad. But when did this happen? Only over the last couple of days. Ethereum was before any of that. So that's why we were able to capitalize on the strength in Ethereum in advance. So then we see Solana has broken out, but it hasn't gone anywhere. And matter of fact, when we did the risk reward on this, there wasn't a favorable trade setup. So we didn't even do one right here. But realistically, the targets to the upside, if you were already in a trade or you took a trade yourself, etc., and you were looking for continuation, the target would be basically $50, and then the 0.5 at $61, and then the 618 reversion of the mean, 200 exponential and simple on the daily would be like $75. Again, I wouldn't expect that to happen. There's a lot of resistance along the way, but it's worth note, obviously. But Solana has, really, really underperformed in comparison. Then we look at DOT. So now look at DOT. We obviously have this long-term descending resistance. Then we have this orange resistance right here. We broke through the resistance. We finally got the 821 to the upside. And look at this thing. I mean, it hasn't even moved. We broke through a descending resistance line. We found support at a key fib, the green line here. We flipped the 821 bullishly. And this trash bag, dumpster diving crypto hasn't even moved. I mean, it did. It moved a tiny bit. And then it was like, oh, no, I'll just meet you right back at the entry. So obviously this is trash. If you said, oh, I'm going to go all in on one of these cryptos, which one's going to be? If you pick DOT, sorry, fucker. That's why you don't just pick your favorite crypto. That's why you don't just say, oh, this one, if it moves, it's going to move the most, 45%, just to get back to one fib to the upside. Oh, that's amazing. What if it overperforms? We could get all the way up to, who cares if it doesn't move anywhere? So again, we have trade setups on this one, completely underperformed, just absolutely pathetic. Basic attention token, look at this. Same thing. We confirmed the 821 to the upside ahead of time. This was more bullish way before other stuff was. Even before Ethereum, this was telling us, hey, this might be the bottom. And then obviously we have this inverse head and shoulder setup. And then here we're barely even trying to keep the 821. We're at the entry or potential entry. Arguably, you could wait until we broke through the neckline, took an entry there. But this thing, again, drastically underperforming. Drastically, it hasn't done anything. It's actually at the entry. So if you took the entry, it moved up, and then you're back at the entry, you just wasted. Everything else went on macro rallies. Things were up double digits, 20%, 50%, and basic attention token did nothing. And it was the strongest one even before Ethereum was showing strength. Not strongest, but stronger. So Link next. Again, Link has a very clear resistance line right here. Pretty decent support here in yellow. Not ideal, but we see some clear touch points along the way. And then obviously we have this descending channel right here, the heart line. We broke through the heart line. We broke through the red resistance. We crossed 821 back to the upside. It started to move. And then look at this. Just pathetic. We're basically, this trade setup's only up like a handful of percents. And other stuff's up 70%. So if you bought Ethereum, congratulations, you're up 50, 60, 70%, whatever. If you bought Chainlink, you're up 6%. Chainlink looks like shit too, leading up to this. So did we have a clue that Chainlink was going to look like trash and be a terrible performer and the worst place to put our money? Well, not the worst, but one of the worst? Yes, it did. Why does Chainlink look shittier than everything else? Well, it's easy. Lower lows. Lower lows. We have a low right here, then a lower low right here, then a lower low right here, then a lower low right here. I mean, why is this trash continuing to just melt down? Let's look back at Ethereum really quick. Look at the difference. This is the difference between the three-legged horse in its last race before it goes to the glue factory that pays 50 to 1. And then, this is the Kentucky Derby winner from the prior year. That's 5 to 1 odds. So sure, if you hit the lottery and Chainlink moves, you might make more money. But we've already made money, locked in that money, and then made money on other stuff because we just picked one that was stronger. Well, how did we know this was stronger? It had a very clear, defined range. It was finding base exactly at the 382. It put in a low here, then a higher low here. And while we went slightly lower than the previous low here, we never took out that low right there. So we had, initial push down 2, 3 times, come back up, retest resistance, shoot to the upside. Much, much better trade setup and chart setup than that trash bag coin that we were just talking about. Sorry, where did we make it to? Link. It's hard to keep track of all this trash. And please keep in mind, These are some of the cryptos I like. So imagine what I say about the ones I don't like. Actually, you don't have to imagine. You can just watch any of my streams ever, because I keeps it real. So anyway, that's why Chainlink is trash. And even if Chainlink wasn't trash, even if Chainlink just absolutely killed it, and BAT didn't, or whatever other one didn't, that's why we want to diversify, because we're not always going to be right. We're not always going to get lucky. Sometimes we're going to be wrong. And the last thing we want to do is go all in on Chainlink or BAT or one of the, we're not ever going to go all in, but pick a crypto and make that our trade setup, and then we're wrong. Because what if the Ethereum trade setup failed? We still had a shot with all the other ones. But if this one failed, and then this rally tops out, and that's it, we might not get any of those gains. So we missed it. And then everything's rolling back over, new lows. We missed the dead cat bounce. So Matic is next. This was another one of the ones that got off to the races very, very quickly. Matter of fact, the continuation trade is what we're talking about. This thing came down super, super deep on this retest initially and looked like it was actually going to go lower. But once it reclaimed the 786, and we were talking about you could have entered here. I did not take this trade setup, unfortunately. But we were talking about essentially these exact targets, the 70 cents, and then we said $1. We didn't quite get there, like 98 cents. You got to figure whenever it's around like $1, people are going to be front running. So it's either going to go to 98 or it's going to go to $1.10, because it's either going to get front run or it's going to overshoot. That being said, this trade setup played out very nicely. Again, 50% in what amounted to like 3 days. So even if you didn't take the trade setup down here, like I did not, you missed the boat on this one, there was still a really nice trade setup right here. And we specifically were talking about how this candle right here had to be our stop loss, because essentially that was the resistance. This candle broke through it and retested a key fib level. So if we broke back down here and took out that previous candle and essentially failed to hold support at what was resistance, we wanted to be out of it. And that's why we put the stop loss in here. And it's not a tight stop loss, it's 10%. But we can't, ideally what we would do is say, okay, if we put in a new swing low, we want out. But obviously, that's 50% upside and 50% downside. That's not going to do us any good. So we had to basically take a continuation trade right here, which is my least favorite kind of trade. And they fail very, very often. But at least we had the opportunity for either continuation, back test, support, and then continuation, or we just get stopped out if it fails. And that's fine. But obviously that played out very nicely as well. Almost hit the $1 mark. And again, we can still look at the potential to move back up to the 382, the 236. We can put a fib from the high to the low, and we can see, okay, obviously that's a key fib we want to pay attention to. Is from where we maxed out to where we went down to, since we didn't end up double bottoming. And then here when we look at that, it's like, oh, well, obviously, look at how much. Let me just move this one over to the side. Look at how much confluence there is with this. Okay, we get above the 236, below the 236, above the 236, support from the 236, resistance at the 382, shoot straight up to the 0.5. So we have 2 fib levels up, and now we would expect 1 fib level down. So again, maybe, and maybe you're still in this trade. Maybe you moved your stop loss up and it took you out already. Maybe you took some profits and part of your trade's still open. There's a very, very good possibility that regardless of what happens, this has already topped out at the 0.5. It's coming back down to the 382 or to the entry, which was that macro fib, the 618 rather, in green. So there's a good possibility now that we're actually coming straight back down to where we just entered that trade from, and we'll have the opportunity to enter that trade once again. And then we can take literally the exact same trade setup back to the 0.5, a 200 exponential, potentially 200 simple, the 618, the green 382, etc., etc., etc. So maybe we take it from slightly higher because it only comes back to the white fib. Maybe the target is going to be the 618 after the 0.5. But regardless, we now have basically more trade setups from around the same area that we could take advantage of. Assuming it's going to continue on. Or maybe it comes back down. Our stop is at break even now. We didn't take any profits. And it comes back down, stops us out, goes much lower. And it's like, well, we didn't win. We turned a winner into a break even instead of a winner into a loser, which is obviously worst case scenario. So that is Matic. And then last we have BNB for the cryptos. And then we'll go back through all the regular stuff. This was actually one of the member requests. So, okay, we haven't pulled up the BNB chart for a long time. And I'm not going to lie, I'm like the worst person to look at BNB because I never really think of it on my own. Usually someone else mentions it or randomly I'll think about it or something like that. But I don't use Binance, so I don't have access to this and have never used it, whatever. Binance coin is like one of the few cryptos that I actually, like, it actually has like a use case. You get fee discounts for holding certain amounts of it, blah, 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 etc. So I actually do like Binance, the fact that it's like a legit utility token. That being said, the last time we did technical analysis on this was a long time ago. And this is the chart from then. Okay. And I mean, it had to be, we were still inside of the right shoulder the last time I did this. So what we're looking at right now is a head and shoulders pattern that I had mapped out in advance. We obviously never, okay, so it was before we ever got up here. So my guess was that we were going to come all the way back up here. This is very common though, where we actually top out on the back test. We break below the 200 exponential and simple, we flip them red, reversion to the mean, and then after that, capitulation. The bloody waterfall, which obviously is exactly what happened right here. We see the bloody waterfall in full effect. So we drew this chart, this head and shoulders and this Adam and Eve topping pattern back before the right shoulder ever printed. That's how long ago we did TA on this. And look at what it has done since then. It completed the head and shoulders, came back down to the neckline, capitulated from the neckline down to the 236, and then almost down to the bottom, hit the measured move of the head and shoulders. And then when we really zoom out, what did we really have here? Well, here we have a macro Adam and then Eve right here. And then we know this is the neckline of the Adam and Eve. And that was our target to come back down for the retest, which we came down perfectly to. Since then, we have found support at higher lows, which is good. It's good that it didn't just go straight to zero. But at the same time, this is a big, nasty fucking pattern. I mean, I don't know if it's going to break down. Maybe it doesn't. But I know that if you told me, hey, we're at support right here, and if this level breaks, like there's literally like a week's worth of price action and a 79% drop. Like, is that scary at all to you? Or, is that, you feel good about that? I mean, I would literally cry in my hands. I mean, this is the scariest chart I've ever seen other than like after something goes to zero. This is like hey, I'm about to go to zero, just a heads up, and I'm not literally saying zero. I use that expression all the time. It's like an old video. But I mean, that's an 80% drop. And you're like, it's never going to go down 80%. It's already down 80%. Dumbass. You're like, why do you hate Binance coin? You're just mad because CZ is handsome and ageless. No, it has nothing to do with that. It has to do with the fact that there's like 14 candles. Matter of fact, let's go to a longer time frame. This is what scares me about Binance. This right here. This is one fucking candle. This is one monthly candle. Okay? So in 1 month, Binance coin went from $43 to $200. Okay? And then after that, it did a bunch of other stuff and it went all the way to $692. Well, now it's at $250 and that area held as support but barely, and it's very close for the 821 to cross bearish and confirm into a bear trend. So what is about to happen? I mean, I don't know. I don't know what's going to happen here. But if I had a guess and you were like, hey, what's Binance chart going to look like maybe in like a month or two from now, I would be like, I don't know, but my best guess is that it looks something like this. And I could be completely wrong. Binance coin could just go through the moon and it could just go absolutely parabolic. And this is not a target for me, okay? This is me simulating a giant red candle that wipes out this giant red candle and takes us, down 80% from where we're at. And it's just all it is. What is it? Oh, look, it's a macro. It's a macro Adam and Eve pattern just playing out. What is that? Basically a slight overshot on the measured move. So, I mean, I don't know. I could be wrong, but if you literally showed me this chart a month or two from now and you're like, oh, look at that giant red candle. That's crazy. Who could have ever seen it coming? I would say, well, if you look at the monthly chart, it's like pretty obvious that's what was going to happen. Now, maybe it's only half as big. Maybe it's the measured move. Maybe it just goes straight parabolic from here. I don't know, but all red histograms, hard sell coming out of the bullish control zone, bearish divergence on the monthly time frame, and one single candle holding up the price action from $40 to $211. You're like, would you like to invest in Binance coin, sir? It's the coin of the future. It's a utility token, and it grants you all sort of benefits. And you're like, really? What are the benefits? And you're like, you can save 10% on your trading fees on Binance. You're like, that's amazing. Sign me up for multiple Binance coins, please. And then it's like, yeah, you save 10% on your trading fees. But then all of a sudden, one big red nasty candle comes in and you lost 80% of your money. Well, let's not exaggerate. 79% of your money. So you're like, but you saved 10% on your trading fees. Congratulations. Yeah, I don't like it. No, thank you. I'll pass. I mean, this chart is the scariest fucking thing in existence. And you look at the weekly and you're like, oh, well, it's 3 weekly candles. It's not like it was just 1 monthly candle. Well, that's even worse. That's even worse. We just lost 1 week. now it's 3 weekly candles. So maybe we get the first move down to 136, the second move down to 67, and then we go to $43. And then you're like, you said 40. And I'm like, yeah, you're right. I exaggerated. Sorry. So 79%. That's what I expect Binance to do. And that's from the Heartline. So really it could be more than that. I mean, I don't know. I don't like it. It looks nasty. If you the risk reward on something that's down this much already normally looks better than it does. But the risk reward on BNB, it looks so disgusting to me. Like the thought of, right now where we're at, it's down 61%. It was down 72%. And in all actuality, my target to the downside right now, and again, it does not have to happen, but assuming from where we're at right now, this plays out, it's 83% move. So if it's going to go down by 83% move, just to get a 1-to-1 risk reward ratio, I need at least 83% move to the upside. And you guys know I would never take a 1-to-1 risk reward ratio. I would only ever take a 2-to-1 risk reward ratio. And that's if we were in a bull market, and we're not. We're clearly in a bear market. So that means I need a 3-to-1 risk reward ratio. So now instead of 83% to the upside, which would be a target of 473 for a coin toss 50% trade, I need to multiply this by 3. So I need it to be 83% to the upside plus 83% to the upside plus 83% to the upside. So we're talking about 250% to the upside. So if we're at 250 right now, I need this thing to 2.5x in order for this to be a favorable trade setup, because I'm risking 79% downside. And you're like, yeah, but you just put your stop loss right here. You don't put it all the way down here, idiot. Well, yeah, I get it, but I'm making a point. My point being is that it's unrealistic for me to have a 250% target to the upside right now. It seems much more likely that this thing falls out of bed and capitulates. And, this was our bloody waterfall before. Doesn't even look that bad on the daily. What's that look like if we see this capitulation? Very, very nasty. I literally would not touch this thing anytime soon. I mean, it's just absolutely horrendous. There's very few other charts that look like they have this much potential downside or likely potential downside. I mean, there's a lot of cryptos I can look at and say, this probably goes to zero. But All right, so that's it for crypto. So we made it through. We did a deep dive on Bitcoin. We looked at a bunch of shit coins, bunch of trade setups playing out. We talked about why we picked certain shit coins like Ethereum over Bitcoin, over the real dirt coins. We talked about why, if you're going to dig through the trash for leftovers, aka altcoins, at least look for ones that look fresh, not like dirty, stinky ones like XRP and Dash and Cardano and stuff like that. Okay, sweet. So jump in the chat for a sec, and then we'll keep on ripping. We'll get into our equities. I've got some trade setups for like upcoming trade setups as well. We'll talk about obviously like the semiconductor ones. What was it? It's like Microsoft, Nvidia, a couple of the other trades that I'm in. We had a couple of uranium stocks we took a little position on, some pot stocks as well. We'll talk about all that, but I really have a couple of sectors or charts that I'm really looking at right now for the potential next big bounce. So we'll talk about those. Hint, it's in the commodities section. All right, so cool sheet. What's up, bro? How far can the dead cat go? She about to murder bulls. Already been over that, obviously. Parag, what's up, man? What's happening? What's happening with you? Not much. Just doing that TA with my homies. Can you cover... What is that? Retype that ticker. What does that say? W, comma, CSGP? Many thanks for all you do. I'm not Satoshi, just what Satoshi would say. Stop it before Craig Wright comes after me. On a fresh chart, can you explain how you set up fib on clean chart? It will be easier to see for a newbie like me. Yeah, I have like a bunch of videos where I do that, including like the new like learning series videos. I literally do it on the Bitcoin chart from like a dead chart, like absolutely nothing on the whole chart, to like the exact chart that you saw for me today, maybe minus a couple of the things we talked about on like the 4 hour. But yeah, there's like 4 videos showing that. It's roughly like 2 hours long. And it explains all of that, how we get the Fibonacci extensions, the internal retraces, how to pick your swings, all that stuff. So go check out that in the playlist. Curious to learn how you drawed fib on AVAX and ETH for recent bounces. The fibs were drawn from the most recent 4-year cycle lows, which is like 2018, 2019 lows, up to the most recent highs, and then from the most recent high down to the most recent lows. And I literally just do the same thing over and over and over again. So if you just learn how to do it on one chart and then just practice it on a million more charts, because that's all I do. I do the same thing over and over again. You'll be like following me for years and you'll be like, oh man, this guy, he never does anything new. All he does is just the same stuff. Exactly. And that's why it works so good, because I'm consistent, and every time something doesn't work consistently, I take it out of my game. And when something new, which there's not a lot of new stuff, but you know, like when I developed the strategy, the master, which is all it is the TJD master is just the moving average strategy indicator, is like what it stands for. So it's just my strategy for trend put into the indicator. So then I'm able to use that as a tool, but the actual way I trade doesn't change. And same with different time frames. People are like, do you use different moving averages? Do you change this? Do you change? Nope. I just use shorter time frames, and I just do the same exact thing, whether I'm on a 15-minute chart, an hourly, a 4-hour, a daily, a weekly, a monthly, etc. Calma Betty says Tesla dumped 75% of its Bitcoin holdings. Yeah, it had to pad those earnings a little bit, or that revenue rather. Yeah, because I think they beat on earnings and missed on revenue. But I mean, they probably sold at either, I mean, I don't even know. We'll find out when they sold exactly and what price, but they probably sold at break even or negative. Because I think the Tesla price was around like 30 or 32K. I can't really remember. Elon knows what's coming. Yeah, oh yeah, for sure, man. Geo Luke, what's up, buddy? Thanks for your time, Crypto Trend Trader. I come for the analogies, but stay for the accents. Haven't heard the Southern accent for a while, because that's really how I talk. That's why. So I use this accent right now to hide the fact that I actually have that strong Southern drawl. But yeah, the accents and the analogies are definitely where all the quality is in the stream. Occasionally there's some useful TA as well. So just try to make it fun. I mean, I definitely have fun. I'll try to make it fun for you guys as well. All right, so we got through the cryptos. Let's just start where we start and run them on down. All right, so oil. Obviously, we back tested 200 exponential and simple, came back up, getting rejected at the 21. We know we have not been able to close above the 21 since the 8 and 21 crossed down. So until that happens, we know obviously we can't be bullish, and until we close above that, we know we can't be bullish to 821, switch back to the upside. But right now, this is support. This is the bottom of our channel. This is our target played out perfectly. This is a 200 exponential and 200 simple on the daily. And we know, while we have touched the bottom of the channel many times, and there's a high likelihood after retesting the heart line that if we do come back down to it, that we break, we still assume that we're going to continue trading inside this range. So as long as we have that flat support and just lower highs, there's no reason we can't come all the way back up here and put in another lower high. There's no reason we can't just break down from here right now. There's no reason we can't just, go sideways. But we're looking at the probabilities of that. Right now, it looks like distribution taking place. So we're preparing for further downside. But we know that we're in a bull trend. So we buy the 200 exponential and simple, and we buy support. And we'll see when we get to XLE shortly as well. So Dow Jones on the daily, again, we crossed the 821 back to the upside, looking good. We're back testing resistance. So what are we looking for? We're looking for our fibs. Where are we in relation to the fib? Obviously, we broke through the 236, back tested, broke back through it. We have the ascending pink or purple support right here, which we would expect to act as resistance now on a back test. We have the 200 exponential and simple, which we have failed to back test so far. As they continue creeping down, there's potential that we get up to them. Obviously, though, we know nothing has changed for these markets as far as the sand in the timer. And I've used this hourglass, analogy every stream for like 3 weeks now, but that is really what it is. And it was getting kind of frustrating that nothing was moving, knowing that it had limited amount of times. And then obviously, like all these trade setups popped off. So that's why patience is so key, and having your stop loss in the right place, or waiting, for the right time to take the trades, etc. Because you could have got scared by time, or you could have got, stopped out by some of these moves, etc., and then missed out on the gains. But nothing has really changed right here. We know macro, all this is just back testing. We're just back testing. This is a bounce off the 200 exponential and simple. We're back testing some of the moving averages on the way down. We know when we flip over to the monthly, it's the same thing. We're very close to confirming the 821 cross. This chart's obviously very bearish with everything except for the 200 exponential and simples, but we're very close to 821 crossing. Obviously, again, as we got to the end of the week, the month, the quarter, and the half, we expected everyone was getting very bearish right here. This is where we said we need to be very bullish right here for a back test and attempt to, not have the 821 take place. And that's all that's happening right now. So again, still looking for that 32,750 target back to the upside. Nothing has changed. The only difference is now everyone else is bullish off those lows as well. Same with the SPY. Again, same exact thing. Crossing 821 back to the upside. We have the 236 now. We're back testing. So the Dow is already above the 236. The SPY is just now back testing the 236. We're lightweight breaking through this resistance in orange. So maybe we're about to get that big push back up to the 200 exponential and simple. But what is that really? It's just what we've expected. Bouncing off the 200 exponential and simple, back testing 8 and 21, trying to move back to the upside. And then obviously the monthly chart, all it is, getting ready to have the 821 cross to the downside, just back testing it. We know the main area we're paying attention to is like that 412 level. But obviously still very bearish. So this just looks to me like, hey, we just broke down from key levels, about to confirm into a bear trend. And then the market's like, are we sure we're bearish? Let's move back up to what was support and see if it acts as resistance. And if it does, we're going much lower. If we reclaim this level, we're going much higher. But obviously, you guys know what I'm looking at. And then when we look at Nasdaq, IXIC, composite, 821 has crossed back to the upside. We're just back testing those same levels again. So obviously this has overperformed to the downside. So we're just now reclaiming the 382. So potential target to the upside is the 236, 200 exponential and simple. Obviously nothing has changed. Obviously we had a bunch of bullish divergence on all these indices. This one has been doing absolutely phenomenally bad. Just bouncing instead of the 200 exponential. We came deeper to the 200 simple, which is what I would expect normally from all of these indices. We are getting the hard buy signal. Expecting that potential back test. And then again, when we go out to the monthly, what happened here? This one already confirmed the cross down to the downside after an indecision candle. We got follow through, and now we're just pushing back up. And people are like, oh, is this rally sustainable? The bottom is in. Let's go. Well, one thing I like to always look at when we see a bottom is, obviously volume and all that other good stuff and momentum and bullish divergence. But one thing I like to look at is, hey, what's rallying? Is everything rallying that's been selling off lately? Because it's probably a relief rally. Are only a couple things rallying and they're like strong and big names or have great fundamentals or, really good earnings report just came out or something? Or I say, hey, it's just like everything rallying or like a lot of stuff rallying, but the biggest moves are in the shittiest names. So stuff that went down 90%, 80%, 60%, are those all now rallying 10, 15, 20%, 50%? Or are they just kind of rallying, but people aren't as concerned about like the total trash garbage that has like no earnings, and that stuff's moving, but it's moving with everything else? And then you can kind of gauge like, hey, how reliable is this rally? Well, when we look at the rally, we see, and let's be real here, we see the absolute trashiest garbage that is down the biggest percentage also having some of the biggest moves back to the upside. So what does that tell me? It tells me it's just a pathetic dead cat bounce. And the only reason all that trash is moving is because the main indexes and like real stocks that matter are moving. And we know obviously that the sand is coming out of the hourglass. We know that most of these trashy cryptos and stocks are going to go away. They're all zombies. So realistically, if the zombies are still rallying, if people are still buying the zombies, if they're having the big outperformance moves, we know that the pain hasn't even really started yet. Because if the people are still buying them and we're still seeing net flows, inflows into Cathie Wood's funds and stuff like that, let's be real. We know that people haven't given up yet. And we don't get a bottom until people give up. Or the Fed / Congress gives up. And that's not happening. So in my opinion, the trash is rallying. It's the most beat down. So, it can rally 50% and people are like, oh, look at this. It's up 50%. And you're like, yeah, but when I go from the top to where it's at now, even after it went up 50%, it's still down 83%. So is that good? No, it's shitty. Unless you're the guy who only just now bought for the first time at the bottom. But everybody else has been in these stocks and cryptos and whatever. So they're way upside down. So who cares if it rallies 20% if you're still down 83%? So then the Russell daily, obviously, again, very pathetic. The biggest of the zombie indexes came all the way down to the 382, breaking through this clear resistance in orange. We closed at it. We now had 1 day of movement. So it seems very likely we're going to backtest the 236, 1976. And I'm not trying to be like spoiled or like lazy or whatever. But the truth is, like, there's no reason to put like trade setups here for like the Russell 2000 and stuff like that when we're trading cryptos at the same time. Like, I mean, the trade setup wouldn't be that good. It's 9% upside, so it would be a 10% downside if we took out the low. So then we have to start looking at like, oh, if we lose support, whatever. And then it's like, well, now we only have a 2.2% stop loss, 9% upside. So it's 4-to-1 risk reward ratio. So that's great. But why even bother? Like, who gives a shit? Why even touch this when we're talking about a 9% potential move when like all like the other stuff we trade is having like 20, 50, 100% moves. There's no reason to. So it's not that I'm just being lazy or whatever, but there's just no reason to trade these things. I'm using them as like a gauge of the market. And then it's like, well, you can just trade them with leverage. And it's like, well, you can just trade crypto with leverage. And it's like, yeah, but I don't believe in crypto. And it's like, okay, fine. I don't believe in unicorns. What's your fucking point? You can still trade it, even if you don't love it or like it or whatever. So when it's all said and done, obviously, too, one thing of note on the Russell, look at this knife stab up here at 95. Now, granted, the knife can go to a gazillion. It can go to any number up in the air it wants to, and it can go negative if it wants to. It is not constrained by normal laws of physics, where it can go only to 0 or 100, like the stochastics, etc. So we did see one other touch here at the same level, and let's see where that was on our chart. Oh, look, that's weird. So we have this crazy high knife stab right here, and that was after we broke out of this like year-long consolidation pattern, and then we broke out to the upside, and then that was the absolute top, literally the absolute top of the Russell, like to the penny. Actually, it was like a day in advance, but obviously we know the knife is a leading indicator. So the knife tells you, hey, the top is in, the Russell's probably going to capitulate from this level, and then the Russell capitulates from this level, and now here we are with another daily knife stab at that same level right here. So it's like, oh, I'm sure now the Russell is just going to be super bullish and just everything's going to be gravy. And the knife will just kind of go sideways to down while price action just melts up to new all-time highs. That seems likely. Or the alternative situation is that, this is just another in a series of lower highs. The Russell is about to capitulate and it's literally on borrowed time. Now, could it go slightly higher? Sure. Could it, immediately capitulate? Sure. I mean, but the fact of the matter is, there's definitely some warning signs on this chart. When I see this is the all-time high, and then the knife is doing something else right here on a back test after a confirmed breakout, I'm like, oh, that's weird. Probably this thing underperforms or is literally already topped out or very close to topping out or some sort of equivalence there. Or maybe a lot of times what will happen with a situation like this is the knife will come up here really high and then it will come back down. And then what will happen is price action will continue to kind of float up here. And then we'll get one more knife stab up again to a new high. And it will be a lower knife stab than right here. So maybe the knife comes back down and then the knife stabs up and it only comes up to 80. And then we have a high on the knife and a lower high on the knife. And then we have a high on the price action and then a higher high on the price action. And then that basically is, bearish divergence on the knife. And it can happen with or without the stochastics, with or without the histogram, etc. But that's, I don't want to say that's what's going to happen, but we can look back at this in like a week and there's a very, very high possibility. I would say probably 75% likelihood that that exact situation happens, where we get a higher price action high, a lower knife high, and then bearish divergence, and then it breaks down, and then shortly after we put in new all-time, not all-time, but new cycle lows. And then again, when we look at the weekly, we can see this obviously trash, back testing the 200 exponential after losing it, complete trash, but doing exactly what we expect. And then obviously we have the monthly, and this is just all support here for literally years, with the exception of like a couple little tips of a candle, a couple little candles outside of it. So as we just slowly grind through here, we're bouncing the 382, we're bouncing the 2018, 2020 highs, and maybe we backtest the 236, maybe we don't. We kind of already did that. So probably we just put in a lower high and then eventually end up at the 0.5. So target of 1,534. But obviously the Russell's trash. We're not trading it, obviously. It's garbage. Garbage. You're like, why don't you short it then? There's lots of other garbage that moves way more than the Russell does. All right, so let's get our sector on. So we have XLI, industrial backtesting. The breakdown at essentially resistance right now. Nice little move off of key levels. Basically, look, we talked about it often, and this has happened quite a few times on the way down in the stock market and crypto. When everything is at support, when we see everything backtesting the 2018, 2020 highs, when we see everything at like key fib levels, when we see everything at key moving averages, etc., and everybody's starting to get really bearish or really bullish, we say, oh, now they're probably off sides. So it's probably time to do the difference, the opposite. So when we broke down and we hit the 200 simple, 200 exponential, the 2018 highs, 2020 highs, depending on what chart we're looking at, everybody was like, oh, this is terrible. We're capitulating. Everything's going to zero. And that's when we're like, well, actually, we're like at support. So now is probably when all the bullish trade setups happen before we go lower. And then when we're taking profits, when we're hitting resistance and hitting our targets and we're selling, then everybody else is super bullish and they're like, oh, the bull trend's back on because we're off the lows again and we're no longer down 20% or whatever bullshit narrative that they make up because they're never consistent. So when it's all said and done, we're just always 2 steps ahead. We're always selling to the idiots that are late, buying the top. We're always buying the bottom from the idiots that are capitulating, selling the lows. And we plan on just keep doing that. Probably just forever till we retire, and then probably still then. So that being said, bouncing 200 exponential and simple, XLI. We talked about the breakdown between all these sectors and how they're basically just varying degrees of the same. So like XLI fits with the majority of them. XLP is basically our safety, trade right now, safety stocks. Consolidating below the 200 exponential and simple, has not confirmed into a bear market yet. Probably gets another pushback up here to like 74 or so and then rolls over, confirming into the bear market. Here we see XLF, underperforming severely at new lows. Then the earnings come in. They're not great. They're not terrible. They've been getting absolutely beat down. And now it's like, oh, financials are ripping. They're up 10%. And they're like, yeah, sure, they're up 10%. But they literally have gotten destroyed for month after month after month. They're trash. This is one of the worst charts. XLRE real estate, again, barely got to move back to the upside. Just trying to backtest like resistance. What was support as resistance now. Attempting to come back up, etc., etc. It's all just the same stuff. Same charts, just varying degrees. XLV, obviously, we see healthcare looks very similar to consumer staples, obviously, and utilities, and those are our safety trades. And real estate looks like a worse version of that, but the actual real estate market looks better, probably because you're not looking at commercial and, oh my gosh, brain fart. What the hell was I just saying? You're not looking at like commercial real estate, or you are rather in the funds or the sectors. As where like, real estate markets like individual houses, multi, housing, etc. might not have come down in the same way as what we're seeing take place there. So XLB materials, obviously just way down, back testing, very bearish. XLY, consumer discretionary, way down, very bearish. We see these key levels. We have back test levels, very much in a bear market. XLU, utilities, the back test, confirming into the bear market. Acting as resistance now. And again, we see the safety sectors are now looking weak. This one has lost the 200 exponential and simple. It looks like it's ready to roll over. So we know now the only one that's really holding up is energy, which is obviously the one we've been bullish on this whole time. But for safety, we're looking at the other ones. But since we're not a hedge fund who has to be all in all the time, 95% invested or whatever, we don't have to sit in mediocre trash. We can just sit in cash if we want to. We can sit in other trash that's trashier for sure, but not on shorter time frames. People are like, oh, but you're losing 8% and probably 10%. I'm like, yeah, that's over a year though. A lot of these stocks are going down 20% in a day. So I'm like, is it worth avoiding a potential 20% or 40% capitulation move that could happen at any time to lose 8% a year. And you're like, it's wrong though. Shadow stats. It's really 12% per year. And that's 1% per month. And I'm like, oh, okay. So am I losing 1% a month in my cash? Is every other asset moving by like 3%, 5%, 10% up and down in a day? Pretty sure I'm good with cash. But pretty sure I'm okay with the cash. You know, over anytime you just dodge a 20% or 40% move in something, I mean, just pat yourself on the back, slow clap a little bit, you know, whatever your vice is. Get you a candy bar, you know, smoke you a stogie. I mean, because you're a fucking hero. That's what it's really about. Not losing 20 to 40%. Because the gains come automatically. The key is to not lose big chunks of your portfolio on a regular basis. And I'm going to tell you right now, 90% plus of people in these markets did not dodge these massive moves to the downside. So if you dodge them, at least with a lot of your portfolio or some of your portfolio or all of your portfolio, congratulations. But don't forget to get back in at some point in time too. Obviously not financial advice. So XLC communication looks like trash. Obviously one of the worst performers. Backtesting, you know, what was previous peak in 2018, 2020. XLK tech, basically just Nasdaq, not quite as bad. XLE energy. Okay, so we talked about oil a little bit earlier. Energy, obviously the only sector still in a bull market above the 200 exponential and simple on the daily. Look, we have to look at this as a buying opportunity. We have to buy the 200 exponential and simple whenever we backtest them. Now, what would make me less bullish on energy right now? If the 200 simple was to cross above the 200 exponential here, you know, potentially if we put in a lower high and started to roll back over, potentially if we did both, that's the situation I'd be looking for. Right now, this is a buying opportunity, in my opinion. So what we're looking for is essentially a minimum internal retracement before we go lower, or a new all-time high, either one. So obviously we've already backtested key macro fib. The 382 is slightly higher. The 0.5 is slightly higher than that. And then our target is actually the 618 at like $81. So we'll see what happens from there. But we know obviously we already came down and we have the purple fib right here. And we basically hit the 0.5, the purple fib, which was our target perfectly. So we came down, we hit our target, and now our next target is back to the upside before we have a target lower. Now, obviously, what could happen here is we could find support, move up, find support again, or not even come back down again, put in a series of higher lows, and then just take out the high and just keep ripping. And that's completely fine because energy-wise, we're still macro very, very bullish on this because this is our macro 1, our 2, our 3, our 4, our 5. Now we're correcting the 5. And then this whole 5 waves right here is just our 1. And now we're putting in the 2 before we go 3, etc., etc. So we hit the 236 already. So we confirmed that it's valid fib from the bottom to the top right here, and that this is in fact a 5-wave structure completed, as we obviously have laid out multiple times. So now the A, we would expect the B lower high, the C down to the 382, possibly the 0.5, possibly the 618, but honestly I think we'll have a shallow retrace. So we're looking to load up on XLE at like 55. Now when I say load up, I'm just saying like reload, not like, hey, I'm all in on XLE. What about you, bro? And you're like, oh man, I'm all in on the Russell because I heard small value outperforms. No, we don't play that game, okay? Matter of fact, if you ever hear anybody say, I'm all in, and you're not like at a casino, you know, either bitch smack them or just never listen to them again. Because that is literally violating one of our like 4 key principles right off the bat. Position sizing. All in, you're not position sizing. I mean, you are. You're position sizing all of your position, but goodbye. Maybe you get lucky once, twice, 5 times, 10 times, but you will never succeed over time going all in. All right, so that being said, XLE, obviously still very, very bullish on this. We have targets at downside. You know, we're looking for this scalp move right here. There's still some meat on the bone for this trade setup. You know, another 11% potentially back to the upside. But again, you know, you're really looking to short the rip if you're assuming we're going into a downtrend. But because we're still bullish for now, we're actually looking to buy and then sell into the fib. And then when we break down below, you know, assuming this plays out and we break up here, we're looking to get back out and then we go down and then we break below the 200 exponential and simple. Then we're looking for our last final long trade, which is the reversion of the mean, which would be a push back up to retest the 200 exponential and simple. And then assuming, that's our long trade back to the 200 exponential and simple, take profits there. Then we assume it gets rejected and goes lower. And then at that point in time, we're always looking to sell rips. So we're looking to be short because the trend will have flipped from bullish to bearish. Now, obviously, we find support here. We come back up. We come back down, put in a higher low. We go to new highs. We're already in the trade, or we took profits and then we re-enter when we continue. However we want to do it, but still technically bullish for now. The last of the Mohicans, though. Got to be real careful. On to transportation, XTN. So we came up here, completely filled the gap now. Obviously, a nice little bounce. 821 cross back to the upside. This thing's been getting absolutely hammered. Looks like we're coming back up here for the completion of the trade setup. Reversion of the mean, 200 exponential. Possibly as high as 200 simple. Again, 14% upside, 4% downside. Playing out beautifully. Broke out of the descending resistance here in orange. Best case scenario, we back test it and then go higher. It doesn't have to happen, though. We could easily just see continuation. But, over a 3.7 to 1 risk reward ratio. Again, obviously, transportation is trash, but it's been getting beat down. XSD, so semiconductors. Okay, so we talked about this little breakdown from our neckline and the potential for this move back up to the right shoulder. And essentially, that was like the semiconductor trade setup. Didn't actually take it on XSD or one of the ETFs, though. But we have it open on NVIDIA instead. But essentially, same setup. Still looking for the same topping pattern. This is essentially the initial back test, confirming into the bear market, shallow retrace, potentially coming all the way back up, back testing, confirming into the bear market before we break down from the topping pattern and go much, much lower. I'm very, very bearish, like midterm on semiconductors. Also, if we look at this knife stab, this thing is through the fucking roof. Again, this is the knife stab right here. This is our previous high knife stab right here. We have a couple other ones that high. This was a knife stab here. This was a knife stab here. And that was a bearish divergence knife stab from the top. And then again, here we see a fairly aggressive knife stab. And then a series of lower highs. Bearish divergence from the top. Another pretty big one right here at this peak. So again, we could still have a little legs on this. But I'm not expecting this to get above 185. And a matter of fact, we're probably a day or two away from this peaking. It could easily come up higher, though. We could easily retest the 200 simple. We could easily put in, a very symmetrical right shoulder. Typically, the weaker right shoulder or the lower right shoulder like this, a weak right shoulder like that, shows that like the pattern is very weak and more likely to overperform to the downside. And then as far as the 210 spread, so we know, at this point in time, it doesn't even matter. We're above that key support or what was resistance. The longer we spend at this level and just go sideways while the indicator oscillators trend down, the more bullish it is. It's just starting to look like a bullish reset. It's like, oh, we peaked out and now we're going down. Are yields going anywhere? No, they're just staying in the same place. Already took out the high from 2018. At this point in time, I'll see you at 5%. See you at 5.3. Bye, Felicia. It's happening. At this point in time, if we don't go down, we will go up. And you're like, well, obviously. And if we don't go up, we will go down. Oh. No, that's not true, though. If we can just go sideways, and the longer we go sideways for, the more bullish it is. If we go up, it's bullish. If we go sideways, it's bullish. The only thing that's not bullish is if we go down. And right now, we're technically inverted again. The 2-year is at 3.22, and I can't even see what the hell's going on here. TradingView's got a clusterfuck. Why can't I see the blue? Oh, sorry. It's right there. Oh, my God. I've gone full retard. It's official. It's 3.01. I thought it was the white line right here, but obviously it's color-coded, so don't mind me. So, yeah, that's it. Done, and done. Obviously, the strength on... Did we talk about the 10-year? Did I skip through? God, I've been doing this for way too long. Did we just start on the Dow Jones? Oh, we started on oil because that's what chart I had up. Okay, that makes sense. Because I'm like, man, did I just brain fart that TA? So the TNX, reclaiming the 821 right now. Still putting in the higher lows. We know, obviously, the area we were paying attention to was if we broke down below that. We talked about the probability of breaking down below that, why we didn't think it was likely, but it was possible, and what that would mean for the charts. for a back test. Obviously, we have a 75 point basis point rate hike coming up, and obviously, we're basically at the 1.5 level now. So with another 75 to 100 basis points, that takes us up to like 2.25 to 2.5 for the Fed funds rate. And it doesn't make sense if we break down below 2.7 and the Fed funds rate and the 10-year Treasury yield are at the same spot. Doesn't really make sense. Possible, it could happen, but very, very unlikely. And, again, with the sand coming out of the timer, it was like, well, we're obviously not going to break down here because then we're going to have to just go parabolic. So it seems more likely we find support, creep sideways, and then go up, which is obviously what has played out. And then TLT, I know everybody was like, oh, it's a bonds and the best opportunity ever. I still think bonds are trash. I got to agree with my man, Peter Stiff, on the, risk or reward-free risk. You take all the risk, you get none of the reward. You're like, oh, you can get less than interest. Oh, that's great. What a great deal. So I lose money on the interest because of inflation, and then also probably my principal gets wrecked in the meantime too. Obviously unless you hold them to maturity. So no thank you. Probably gets rejected here and goes much lower, using an awful lot of energy to go nowhere. This looks like a bearish reset to me. We've already broken key supports. I think rates are going higher and bonds are going much lower. I really do. And then the VIX. So we were talking about this. One of the group members was talking about spotting some potential bearish divergence taking place on the daily VIX chart right here. And it was actually yesterday. And what we were discussing and the scenario that we discussed actually played out perfectly. So again, lucky guess. But what we were talking about basically is this low right here, close. And then obviously we have this clear support, 200 exponential, 200 simple, the ascending channel, the bottom of the triangle, blah, 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 blah. Tons and tons of support, just a whole cluster of support right here. So here we put in a low, and we were talking about it right here, and he was saying, is there potential, divergence here? And there is potential, but it hadn't happened yet. Now it's happened, because here we put in a lower low. You can see slightly lower, essentially the same, but slightly lower, which obviously if we have a low right here and a slightly lower low right here, and then we look at our indicator oscillators, here we see a low right here, and then we have a higher low right here. Here we have a low right here, and we don't know yet, but potentially a higher low right here if it starts to roll back over. Now, it could easily just keep going down, and then there's no divergence because we have lower low on the histogram and then a lower low on price action, obviously. So it doesn't have to. It could easily invalidate this, but that would be a breakdown from the range. And you guys know my base case is that this acts as support every time we come to it, and this acts as resistance every time we come to it, and the support is stronger because it's been going on for longer. Here's where resistance started. Here's where support started, way back here. So obviously, we would expect this area to act as support. So now we have officially printed bearish divergence between this point and this point, assuming we started to roll back over, assuming this happens. So then we'll have support at the bottom of the channel, support at the bottom of the triangle, support at the 200 exponential, support at the 200 simple, and we'll have bullish divergence. So that's a bunch of shit telling us like, okay, yeah, we probably are about to bounce right here and probably really nice. And you're like, oh, so we're going to break out? No, we're probably just going to bounce to the top of the range. But with the VIX and how awesome the moves are in the VIX, we're talking about a 42% move just to trade within the range. And then back to the bottom, and then back to the top, and back to the bottom, and just keep going sideways. So that's what we're expecting. It seems very likely that if the VIX is getting close to bottoming, which we suspect it is, that also the stock market, at least the S&P, etc., are very likely getting close to topping. Okay, so that was just cleaning up the couple we missed there at the beginning, because I think we started on oil. So then DXY is next. So DXY backtesting the 21 and then backtesting the 8. I would expect it to just chop around in this range. Obviously, if we break down from support, we can start looking at these previous resistances as key supports. We have the hard sell. We left the bullish control zone. All red histograms should be bearish. We've lost the 8. We're bouncing off the 21. Long term, I'm still very bullish on this. But we know every time this has retraced, it's been a very shallow retrace and complete cooling of the indicator oscillators. So that's our base case, is still people would be buying the dip on the dollar because it's very, very strong. So Tesla still doing nothing. 821 have crossed back to the upside, still going sideways, just reported earnings. We'll see what happens. NEO rolling over, so back testing 200 exponential and simple, 821 confirming back. This is what we were talking about with China. Basically a back test and failure to reclaim the trend, and now we're going back into the bear trend or continuing the bear trend. Same with Baidu, you know, potentially very close to flipping the trend bullish. We have to get bullish when we see that happen because that's the strategy. But instead, nope, failure and expect capitulation. Could still be okay, but looks like a clear rejection. Alibaba, same exact thing, rejection. Looks like we're going lower, probably new lows. So Nvidia still in this trade setup for now. From actually, it was a slightly higher high than like the initial setup we were planning. It's moving okay right now. Obviously nothing like the crypto moves, but 43% potential. Held like fairly strong for now. So we're up some. It's like right around 20% right now. Obviously looking for that retest of the 0.5. The macro 236 in red. Just under $200 target. AMD trade setup wasn't quite as nice, but basically back test of the 236. Looking for like 95 to 100 on AMD. Apple bounced to 236 pretty nicely. Headed back up here, hit the 200 exponential and simple. There was no viable trade setup. But look, we know what this is. This is exactly what all our charts look like right before they confirm a bear market. Bear market, back test, reversion to the mean, continuation of the downside. Does it have to happen? No. But we're going to get a really good idea of what the strongest stocks are about to look like, the strongest sectors are about to look like if they confirm into the bear market and see continuation. Because we already saw it on 90% of the stock market. There's just about 10% left, maybe less. So Google obviously had the split, so it's at 113 now. I still fully expect this thing to be down at 100 soon, just because I'm stubborn. But we'll see what happens. Obviously had its little run up leading to the split, but basically just sideways in this range. This is obviously a bearish pattern. We basically have a leg down. We consolidate in like an upward channel, and then we have another leg down typically. And I don't remember, what am I doing? Oh, yeah. So we have a leg down. And then we have a sideways consolidation pattern. God, what am I looking for? Oh, channel tool. Duh. So we have a sideways consolidation. And then obviously, if we were to break down out of this ascending channel, we would just look for, you know, that same move again. So let's just assume that was our leg in. We chop around sideways. We eventually get back to the 200 exponential, maybe the 200 simple, and then eventually we break down from this channel. Then we are just looking for that same move again. Where does it take us? Straight to zero on Google. Google goes to $0. Or wait, no. Sorry, Google. Hey, don't take it out on me, man. I didn't mean to hurt your feelings. I know you're listening. But that is what the measure move would be, which conveniently lines up like almost perfectly with the 618 macro, going back from the 2020 low to the all-time high. So we're just back testing the 236 basically as resistance inside this channel, looking for the potential reversion of the mean. But eventually, you know, the target, we basically front ran the 382 at $100, aka 2,000 at the time. And then realistically, the 0.5, 88.59, maybe the 618, $78, somewhere around there. We'll see. Playing out really nicely though so far. Very, very technical. Very nice. This is what Bitcoin did before its last breakdown. Amazon back testing the 0.5. So we know this is a double bottom right here. A W double bottom. So we have basically one W right here that forms the V of the macro W. And then we have a series of W clusterfucks right here that form another V of the W. So we have a single bottom. We have a double bottom. And then obviously the 0.5 is our neckline. So we know that the measure move of a double bottom will be from the bottom of the range to the top of the range. And while this is not like set in stone, the absolute has to do this, we know that if we do break above the 0.5, we're likely to hit obviously 382, 200 exponential, 200 simple, possibly the measure move, or even the macro 236. Or no, not even macro, just from the 2020 low. So, oh wait, no. Yeah, okay, 2020 low. So yeah, that's what we're paying attention to. I mean, I think this would be a very strong resistance. It was obviously a super strong support. I think 137 is probably the most likely. Now again, you know, while we use these as like macro, you know, of what's happening in the markets, And obviously you can trade them. The risk reward and upside potential on Amazon, not going to be anything compared to what it's going to be on like crypto or, Nvidia or some other crazy speculative stock, pot stock, something like that, etc. So, maximum up here, 25%. That's probably not going to happen. Most likely 11%. And we're already well off the 11%. So then we're like, oh, well, we'll just buy the breakout on the back test. Or we'll just say if this candle gets taken out, we don't want to be in it. So, if you really were like, oh, I don't trade cryptos or anything that you can smoke. So I'm comfortable with like mediocre gains at best. You could say, okay, if we take out that previous daily candle on a daily close, I want to be out. If we get above this 0.5 or where we're at right now, I'm going to buy in on the momentum for the potential breakout. And then my target to the upside is going to be the 382. If I'm lucky, maybe the 236. But you're looking at 10.5% upside, 3.86% downside, 2.69 to 1 risk reward ratio. I mean, it's like barely, it's technically not even a trade that you could take. So you'd have to be shooting for an overshoot. But anyway, knife through the roof on all of these things. Again, just looks very, very close to like topping out. And again, I can see we can count the grains left in the sand right now, and we have, 5 grains left at this point in time, 7 if you're crypto, because the weekend. Microsoft completely underperforming, just being a complete piece of trash. Could have made these gains on a crypto position in like 10 minutes. Instead, we're like 8% up on a trade setup that's been in effect for like the better part of our life. Well, maybe like 3 weeks, 2 weeks, something like that. Anyway, still looks okay. Back test, whatever. Who cares? Microsoft, you suck. Twitter. But I mean, honestly, if you were like, hey, pick one chart and you have to go long that single asset and you can't diversify and you can't touch it for 50 years, what are you going to pick? And you're like, probably Microsoft, honestly. Probably Microsoft. Twitter. Tweet, motherfuckers. Doing nothing going on here. Everybody's like, oh, Twitter's got the best deal ever. They're going to force Elon to buy it. Blah, blah, blah. Yeah, we'll see. Meta. Complete trash. Backtest. Horrible chart, complete garbage. I would never invest in it. Knife through the roof. Could it get a push back up here slightly higher? I mean, first got to tag the 618, 189. I mean, it's almost there. Does it get to 217? Maybe. This chart still looks like trash. Obviously, there's no reason to invest in that. I don't even know why it's on the list. All right, on to commodities. Some nice looking trade setups and a couple member requests, aka the can you spot the worst chart on the internet and request it. So let's jump right in and then we will wrap it up from there. So gold, you know what? Look, it's fun being right most of the time, but you guys know I am deep down inside macro gold bull and love gold, but obviously the charts don't lie. And we've been way ahead of this the entire time. We're almost there. I mean, I've been calling for this target for some time now. I said between 1675 and 1685. We're at 1692 right now. So I'm going to check that one off as another correct call. We'll see what happens. Obviously, it was very obvious in hindsight, very clear what was going on here. There was a macro potential case of like a cup and handle, but we knew as soon as we broke down from right here it was trash. And obviously since then we have like basically capitulated 10% pretty quickly, and this looks really, really bad right now. I do expect this area to act as support at least temporarily. Also, this is pretty beaten down, no divergence or anything like that, but we're at pretty low levels. We're trying to make an exit of the bearish control zone, very close to exiting and then potentially getting a hard buy signal, which could potentially lead to another decent bounce, at least a back test of like the 786 or like the 382, depending on if you're going high to low or low to high, obviously. Because realistically, we should redraw this now, since it like double top, double bottom, basically. This is what we should be looking at, assuming I'm right and we hit the target. But even if I'm not, I mean, we're right there, so I'm already right. I'm just 100% right here. I'm 98% right if we stop right here. But that being said, let's just assume I'm 100% right. So when we come back down here, then we're looking for a back test of 236, which is essentially the 786 in white, or the 382, which is exactly the 618 in white. So, you know, that's it. 1760 to 1820. Again, is that going to be like a scalpable trade? No, not really. But we would expect that area to act as support. And again, you know, it's not always fun to be right, but also, you know, it's fun to be right. Silver, same thing. Capitulation, made it down almost to $17, which I believe I said somewhere between $15 and $17 was potentially my final target. 1850, little bounce off there. Looks wrecked though. Looks absolutely horrendous. But also, we hit the measure move perfectly, which was the breakdown from the channel. We also are getting a hard buy in the bearish control zone still, but only just. So we're very close to exiting the bearish control zone. You know, again, I mean, I'm not saying we have to get some like massive crazy rally that like takes us to $50. Obviously, that'll never happen. But 9%, 10% bounce. Is it worth paper trading it? You know, if you're stuck in a position, is it worth exiting? You know, back at like $19, $20? Probably. I mean, I don't know. It depends how you look at it. Key support right here, though. 1750 really needs to hold. But yeah, silver looking rough, but it looks ready for a bounce. I mean, it really does. We'll see what happens, but building momentum right here. I would love to see some bullish divergence, which we're not getting. But also, I mean, it looks ready for some kind of move. But again, you know, what are you going to play? 10% move to the upside when everything else is moving like 10% in a day, 20% in a day? Who gives a shit? Gold-silver ratio is still strengthening, uptrend. Obviously, you want to be in gold, not silver, based on that uptrend. ACB, Aurora Cannabis. So I've been talking about these pot stocks and essentially talking about how, you know, I think they likely put in new lows. You know, I want to see everybody a loser before I agree that capitulation is taking place. But also, I told you guys, you know, I'm taking positions in these things. You know, starting to dabble, building positions. And then when they pop in my favor, I'm taking some profits in case they just keep going down. And obviously, that is the case once again. So ACB, nice little move up here, confirming the 821 cross, or at least very close to it. Building momentum. I'm not even going to talk about bullish divergence on pot stocks because they've had bullish divergence for like 10 years. Before they even existed, they had bullish divergence. Knife is already through the roof. So is this going to fail? Probably. Is there one single candle down and then a gap above that? Yes, there is, obviously. So is it possible ACB sees some like super strong move over the next couple days and hits $2.55? Sure. Does this thing always underperform? Yes, it does. It always underperforms. So it probably does not get there if it gets anywhere. But definitely worth locking in profits on these pot stocks, especially if we get like that 40% 233 back test and 100% if we get that 54.47. Because I would much rather re-enter from a higher price than give back, you know, 40 to 50% move that comes in like one or two candles. Because that's probably what's going to happen. So Tilray, we know, typically overperforms. Literally hanging on by a thread on this one. Obviously with the push down, but obviously we weren't the only people looking for that invalidation lower low close. But we have 33% potential move for the 786 and then 75% move back testing the 200 exponential and simple. Tons of support that we would expect to act as resistance right here. So with this 2-to-1 risk reward trade setup, not really worth taking on this one. Tilray typically overperforms to the upside. So there's definitely some potential there. But again, the risk reward just wasn't there for like a breakout trade on this one. Unless you're doing, you know, just getting a position from those levels essentially and then just taking profits on it. CGC, so I told you guys obviously where I was buying on this one. My target was the 1.618 or the macro. Obviously this thing has like complete round tripped its entire life cycle. So we had the macro 786 at 240 and then we had the 1.618 from the low to high right here. And that's where I entered into a position at. So slightly up on that position where we picked up through here. But obviously it's nice to see a couple big juicy candles like this. What's going to happen now though? Are we going to close a gap and then it's just going to sell back off? Maybe. I mean, honestly, probably. It's still another 20%, you know, and we're already up, you know, about that anyway. Not going to get greedy on these pot stocks, I'm telling you, because they're literally just getting ready to go lower. And if we're wrong, that's great. We have I mean, I would love to be wrong about pot stocks going lower and just keep building positions from higher prices. But, 35% total move, like about 15-20% still on the bone. After that, we can start looking at the macro next level. Like 481 is really, if this thing's going to show some actual bullishness, we would expect 78%, and our target being the macro 618 in white, $4.68. Now, we'll see if that happens. I don't know if it's going to work out like that. But again, with these pot stocks, the upside is just so ridiculous in comparison to the risk at this point in time that it's just, for me, it's just ridiculous not to at least try to take some positions here. But we're talking about 80% upside. And, even if we took out the low, 20% downside. So it's 4-to-1 risk-reward ratio for that. Now, obviously, this one has already moved. But, it's not like I wasn't telling you guys the whole time when I was purchasing into Canopy Growth. But again, all these pot stocks probably go to new lows tomorrow. And all our gains wiped away. So better have a stop loss and a take profit in place. Not financial advice. So uranium, again, another one that I took some positions in. CCJ, backtesting 200 exponential and simple, probably the most bullish of the uranium stocks. URA hit our target right here. And again, just looking for that backtest back to the 2130 level off of the 382. I don't know how this is going to end up playing out. We shall see. But nice little like 12 to 15% move back to the upside. And then I think that's all I pulled up. Yeah, that's all I pulled up for the uranium stocks. But it was the same thing. We put in a new low on UROY, and that's where I took an entry on that one. Okay, so GSG is the iShares GSCI Commodity Index Trust Fund. Got that? So basically just a commodity like proxy. Obviously, commodities have been in a raging bull market since they confirmed bullish essentially back here in December of 2020 at $12. So they went parabolic, gave back essentially like almost 50%. Well, really, close to 50% of that rally. Probably should draw some things and do some stuff here. So from the bottom, we're close to the 236 retracement from where we flipped bullish, like the trend actually flipped bullish. We have essentially given back 50% of that move. So that's why it was so important, obviously, to get out. But that being said, we're still very much in a bull market. 200 exponential is still postured over the 200 simple. And while the 821 have crossed down, we hit key support. So it's possible we come slightly lower to the 200 simple. But again, we have to be bullish on this. So what we're looking for is the same thing we were basically talking about earlier, where we're going to look, did we confirm already a retrace back to the 236? Yes, we put in a low right here, and then we hit the 236. We almost hit the 382. So that's our next target to the upside. After that, the 0.5, the 618, potentially new all-time highs. But realistically, we have to look out for a lower high, a break below, a back test, and then a bear market. Because that is, what things look like when they go into a bear market. And when they don't go into a bear market, they bounce here and then they go to new all-time highs. So either way, we'll be positioned accordingly for that. But the difference is are we ready to take profits through these key levels? Well, of course. But still assuming or hoping or anticipating or, measuring or weighing the probability of new highs on this as well. So definitely worth paying attention to, the commodity bull run continuation. Maybe it's over, though. We'll find out. But regardless, I think we're headed up to a new lower high, at least, if not a new higher high. Okay, and then the big play that I've really been looking at lately is copper. So obviously, copper has a nickname, Dr. Copper, because it tends to, sniff out when something is wrong, aka, if the markets or commodity cycle is ending or industrial cycle is ending or, expansion is ending. Why is that? Well, you need copper for like everything. So if we're going to build like a new grid and all this like green energy stuff, sure, we need a bunch of copper to do it, to transport the electricity, to, build all the components. If we're going to, put piping in like, water pipes, whatnot, well, now we use like PEX and stuff, but essentially infrastructure wise, copper is like huge. So when copper starts to roll over, we got to watch that the rest of commodities or the, cycle is not rolling over. Well, I would say this is rolling over if you've ever seen it. We backtested 200 exponential and simple. It acts as resistance, confirming to a bear market, bloody waterfall. So this is the same situation over and over again we see. And what do we see here? Basically a picture perfect, just beautiful. Well, it was beautiful when there was not a bunch of shit all over the chart. My charts, there's always, God, what am I looking for? Damn, I'm going like full retard on these streams lately. I just want the channel tool. Why is my brain malfunctioning? So we're basically looking at this channel right here. And then you're like, well, you already have that drawn basically. So why are you putting it again? Well, this is just Wyckoff type 2 distribution. We basically come in here, put in a top, go sideways, put in a lower high, continue to go sideways, start your trend to the upside, put in a higher high. That's basically a throw over, a failed breakout. And then we backtest, fails, backtest, heart line, backtest, breakdown, bloody waterfall. I mean, that's literally, and now you're like, God, you just say the same stuff over and over again. Correct. And it works. So it doesn't always work, but how many times have we literally seen this exact chart play out? And we can see it play out in advance. So we don't have to wait until afterwards and be like, oh, look, that's what this thing did one other time. We can look at it and be like, oh, this looks like it's about to do the thing that stuff always does. So that being said, look at where we're at now. So we had a breakdown all the way from the 0, which is our low back here in March of 2020. All the way to the top here. That's our white fib. Bounce to 236. That's the bottom of the channel. Lose the 236. Hit the 382. It doesn't really act as support. Backtest act as resistance. And then we continue down to the 0.5, which also you'll notice that we're corresponding pretty well with the internal Fibonacci extensions from the previous high to low, which gave us the 1.618 target, which is how we nailed the copper top so beautifully to begin with. So we basically use the high to low right here to give us a fib extension target. Then we use the 1.618 fib extension target to call the top, and then obviously distribution pattern, and then rolling over. And now here we are at the 0.5. So we know that Charles Dow theory tells us this is a buying opportunity. Now, we would have rather have seen, obviously, this area hold, as that was our previous resistance acting as support. But instead, we overshot it. We hit the 0.5. So now we have, a pretty reasonable retrace. Lost some key support, so it's kind of shady. But the real question is, did we just overshoot slightly and we're going back up? Probably. Or are we just headed back down to the 618? I don't think we're headed to 618. I think this chart looks pretty tired. We're rolling back over, multiple green histograms, hard buy signal close to leaving the bullish control zone. The knife is above both stochastics. We're backtesting the 8 right now. Next move back up would be a backtest of the 21 and reclaim resistance. And then at that point in time, we would probably move straight to the 382 and then possibly even see a backtest as high as the 236. Now, are we going to gum all the way down? Basically 2 fibs down and then 1 fib up and then 2 more down? Definitely possible. Are we going to come, 2.5 fibs down and then 1 fib up, consolidate, and then another fib up? Possible, but less likely. So realistically, I think what we're looking at is essentially a pushback up to that 382, which is like 2180, which is like borderline, not really tradable. 9%. But we'll pay attention to it because there's always that possibility that, this doesn't end up in a long bear market and, bounces essentially. Let's go to our weekly chart real quick. And bounces essentially the 200 exponential and simple, reclaims these areas, and then continues to the upside. But this chart is nasty right now. So, we're just starting to look for potential bottoms and trade setups and, patterns or clues from copper. But right now, I mean, let's be real. This weekly chart is still pretty nasty. But there is some potential on the daily. And then when we look at the monthly, it's like, oh yeah, we overshot into that zone, but who knows? Maybe by the end of the month, we're closing back at that 2105 level. And then all we did was put in, basically a double bottom here, came to like a new high right here, back tested the previous high right here, and then we're just headed straight back up and to the moon. And these have already cooled off. That knife is pretty aggressive to the downside. So we may not see too much more downside. But that is copper, CPER. And I have a bunch of copper charts up here, but not going to do like deep dive in all of them. We're just going to kind of look at the similarities, which are more bullish, which are more bearish. So JJC, IPATH Series B, Bloomberg, copper, sub-index, total return, ETN, aka JJC. So again, we see that capitulation move. We see the back test of those 2018 levels. Looking to see if it holds up as support right here. And then again, if we just go from the lows to the highs, we see overshot of the 382 straight through to the 0.5, consolidating to 0.5, looking for either a 1 or 2 fib level bounce. Worth paying attention to. Again, we could see lower prices, but I'm very, very bullish on copper long term. The same way I'm very, very bullish just on commodities in general, energy, all that stuff. So I'm not convinced that the bottom is in necessarily, but also these things have ran up massively. We took advantage of it on the way up, and now we've taken profits, and they're coming way back down. Now it's time to look for re-entries. We don't have to jump right on them, but we need to watch out for them. Wait for the opportunity to present itself. SCCO, Southern Copper Corporation. Again, we broke down from that key support, back testing what was some key resistance. So we'll see how this develops over time, obviously. But if we take from the low right here to the high right here, we'll see on this one that we actually put in like a double top right here and then a lower high right here. And then we see we slightly front ran the 0.5. So we by like a penny. So we're bouncing back to the 382. Potential to retest the 236. Seems like it would underperform. Top out somewhere around like 56 and then go lower. But again, definitely watching these copper. And then the last one for today. Oh, no, sorry. Still two more. FCX, Freeport, McMoran. Again, same thing. These charts are all really the same. Just a couple different options to look out for. Here we see less deep of a retrace. They didn't come back to that backtest level. We see from this clear swing low here, not the macro bottom, obviously, but the clear swing low. We have broken down from the 236. We're back testing it. We know everything else has basically lost it. Went to the 382. Most of them have been down to the 0.5. So this is holding up better or underperforming to the downside. Now, they're not an exclusively copper play, but, obviously, if you're going to be holding one of them, you want to hold the one that goes down the least. And then if we are going to have a bullish bounce, likely the overperforming or the most bullish is going to be the one that's holding up the best. Not always the case, but worth a note. Then we have COPX. So from the low to the high. And then we see, again, this one has lost to 236. Came down almost perfectly to the 382. Just slightly front run it by a couple of pennies. We know most of them are down at the 0.5. Back testing these previous resistance and as support. So again, this one's holding up a little better. We would expect a potential back test of the 236 back up to like 32. But realistically, we would expect eventually this one to come down maybe closer to 21 or so. But very much worth paying attention to these as they are exiting the bearish control zone, putting in a couple green histograms, bouncing off some key support levels. Some of them are just absolutely destroyed. Others holding up a little better, but copper is definitely on my radar. And then we have CRISPR, the crispy one, CRSP. So back on top of the 200 exponential, and it is flip back bullish. Fairly bullish chart going back to 2017. Obviously trying to confirm back into a bull market on the daily. Weekly, we had confirmed into a bear market, and this is just the back test. So if we hold above, this is essentially all I'm looking at, is if we're above 75, it's bullish. And, weekly has been saved, and we probably go to the upside. If we break down below 75, it's bearish, and it looks like a rejection lower high, and we likely capitulate. The real question is, what are we retracing? Well, we've already retraced from this low right here down. So if we go any lower than 786, we're going to lose that low. And then we might as well look at the previous swing before that because we already bounced it. So there's no time left to enter into a trade here. The real question is, does it top out at this 0.5 right here? Does it backtest the 382, etc.? And really what we should be doing is drawing the correct fib from the top right here to the bottom, knowing that we've already bounced. You know, realistically, the area we would have been paying attention to was the 236 or the macro 618 in green right here. And then once we took that out, we would expect essentially, you know, the measure move back up potentially to, you know, some of these other targets. So that being said, we know on the weekly, you know, as long as this is the number one most important area, is just 75. If we're above 75, it looks okay. If we're below 75, it looks bad. Weekly is building some momentum, looks okay. If we go to the daily, we're trying to build momentum. The problem is they're both pretty toppy and have had some pretty weak moves. So I wouldn't get too excited on this one for like some big bullish move to the upside. Matter of fact, it seems like the highest this thing's headed to is like 97, which is still a decent move to the upside from where we're at now. But all the meat is already been taken off the bone. But we have clear, you know, we have a clear inflection point. You know, we're either going to hold support at the 200 exponential on the daily and the weekly and then go higher, or we're going to lose this level and then roll over. And it's probably going to, you know, look a lot like the Nasdaq or crypto or, you know, whatever else. Because they're all obviously trading exactly the same right now. So DRV, Drexion, daily, real estate, bear, 3X shares. So we talked about this quite a bit. You know, and this is one of the group members' trade setups or like requests. We talked about this quite a bit. You know, this is the type of thing where you spot a potential bullish trade setup. You get in, you get your nut, and you get out. This is already well overstayed its welcome. Matter of fact, when we were talking about this, you know, really you should have already taken profits right here and then been just potentially looking. And as soon as the 821 crosses back down, or as soon as it comes back down to your entry, you just get back out. I mean, it's still technically bullish because it's on top of the 200 exponential and simple. There's still technically a possibility for this mad rip to the upside. But if you look at this chart, I mean, these things are supposed to just melt down. And most of the time it just melts down. There's like one or two examples of when it gets like a big spike. Almost every other time, when it gets above the 200 exponential and simple, consolidates back at it. It usually goes lower, back test, and then goes much, much lower. So I would just assume at this point in time that this trade setup is done. You got the spike, but didn't get the big spike. And that's it. Now, again, you can wait till it stops you out at your entry, stops you out at your initial stop loss. Maybe you already got stopped out and took profits along the way. But, you know, in my opinion, this is the type of thing where you shouldn't be trading in this for more than a day, a couple days, a week, something like that. So overstayed our welcome. Doesn't mean it doesn't shoot up 120% tomorrow. But I would just be ready to either get stopped out or just exit. It's been too long. It's had too much opportunity. And if all of a sudden the market turns around, if we see the VIX spike, that could all change tomorrow though. So really, I would probably watch the VIX and be like, okay, if the VIX bounces from here, I'm probably going to be okay. And this trade's going to play out. If the VIX falls out of bed, I better get the hell out of here because the market's probably ripping and roaring. Which again, is not my base case, but always a possibility. So UTZ Brands Inc. So backtesting what is clearly resistance and support right here. So let's zoom back out. I thought we had this chart already. Huh. It's weird. So going back to 2019, we'll just go from our low right here to our high. We see we got a perfect 786 retrace, very, very technical. We see some interactions at some of the other fib levels. Obviously, very much respecting these levels on the monthly. Very, very much. With either closes or wicks. So bottomed off the 786, reclaimed the 618. So we know, obviously, if we go from top to bottom, we have already hit the 236. Confirming that we have at least temporarily bottomed and the fib is in. Once we broke above the 236, the target was the 382. Also lines up with the 0.5. And then obviously out of the 0.5 and the 382. Because it was such a deep retrace, a lot of these fibs like line up almost perfectly in like the kind of mid zone right here. They don't really start to diverge until we get out past like the 618 and whatnot. But that's what I would be looking at basically is, this thing is obviously trying to, reclaim the bull trend. Very close to a weekly 821 cross back to the upside. That's obviously very good. We're not seeing that in a lot of other places. We got the bear cross on the weekly at $24. It's now down at $15 and about to confirm the bull trend. Hard buy signal, a bunch of bullish divergence here. We see obviously we're in the bearish control zone here. Here we're much higher. Don't even enter into the bearish control zone. Here we have price action at lows right here. We see much lower lows right here. Same thing here. We have a big low histogram. Here we have a much higher histogram. We're on top of the slope line. The slope line is flipping blue. We're almost above the zero. This is again on the weekly, not on the daily. So on the weekly, this thing looks very, very close to confirming back into a bull trend on a weekly. So it seems very, very likely that we're headed up to the 382 and the 0.5 at $17. And then after that, seems very, very likely we're headed up to 1932, potentially as high as 21. At that point in time, we start looking for potentially new highs. If, we see the strength continue. Looks very, very good on the weekly chart. And as far as the daily, looks pretty good on the daily too. We're back above the 200 exponential. We're back above the 200 simple. 200 exponential already has a bullish slope, essentially flat. 200 simple is very close to flat. Essentially, if we just hold above, at this point in time, 1475 is our line in the sand. If we're above like 1475 right around here, we're bullish. And this thing probably just keeps going because it's already confirming a weekly bull trend. It's very close to confirming back in a daily bull trend. And the monthly actually looks okay too. So in all reality, this is like, these setups right here are literally the best setups. They may not have the highest probability of success, but essentially we're getting a good value on something based on the fact that it's already sold off quite a bit. Not only did it sell off quite a bit, but it didn't just have like one candle down and then get bought back up. It's been a slow, painful grind for anybody that's been in this. It's trading extremely, extremely technically on the macro and then the internal retracement. And we're basically at the coin toss area where it's like, hey, look, 200 exponential and 200 simple are whatever time frame we're on. They are essentially the fair value on that time frame based on 200 candles. So if we're at fair value now, this is the best inflection point. Again, we're talking about, a stop and reverse point or an inflection point or a SR flip, where essentially we could be saying, hey, this has been in a bull trend, then it went into a bear trend correction, and now it's about to confirm into a bull trend on the daily and the weekly. Now the daily looks pretty tired, so over the next few days, it wouldn't surprise me to see this come back down. I'd be looking for a new lower high or this area to hold. If you're already in a trade on this, I would stay in it for now. I would just watch my stop loss based on the lows or my entry. If I wasn't in a trade on this, I would watch for it to consolidate and hold right here, potentially come down and get a lower entry. Ideally, you would get a lower entry always, but that doesn't always happen. So you look at it as basically, what's going to invalidate me if I was going to enter into trade right now? Well, if we go below, let's say 1750 or 1775 or whatever, I want to be out. 7.5% stop loss. We know there's a very, very high likelihood, regardless, that we're headed back up to here. 10.5% upside. But realistically, our target to the upside is the 0.5 or 382 in green. So we have 23% upside, 7% downside. Risk reward 3 to 1. Very close to actually being a bull trend. So even if it was 2 to 1, we could arguably take the trade setup. So it's over 3 to 1. So it's definitely a nice trade setup. And then realistically, the fact that we would be potentially confirming into a bull market means not only do we want our one like modest or, whatever trade setup, but we actually want some more aggressive trade setups as well. Potentially the 618, potentially back testing the 786, all the way back to the 236, etc. So somewhere around in here, we'll just slap in the middle. 47% upside, 7% downside, 6.66. We'll just take profits just a little bit early. There we go. So targets upside 2274 for a 47% upside, 7.8% downside for a 6.55 risk reward trade setup right there. Yeah, so that's what it seems likely to me. Now, in all reality, you're like, well, yeah, but you just said it was about to flip into a bull trend. So realistically, why are we just doing internal retracements when this thing's headed back to new all-time highs? Correct, I agree. So then we can start looking at, a double top trade setup or else a 1.236 setup. That's our initial target to upside, 140% with a target of $37. And then realistically, you guys know my real trade setup. My real target to the upside would be the 1.618, which is at $52.99, or a smooth 239% from here. Now, granted, it probably goes to zero tomorrow. And obviously, it's not financial advice. But this is what we're looking for. Because realistically, what are the two scenarios right here? We get rejected, it confirms back into a bear market, and we go lower. We lose 7%, and who cares? And then realistically, it probably goes back down to the previous lows, and then maybe even lower than that. And then we can reevaluate later on when we try to cross the 821 back to the upside, et cetera, et cetera, et cetera. So that's worst case scenario. We lose 7%, it goes down, whatever. Best case scenario is we get the little trade setup. Second best scenario, we get the other trade setup. Third best scenario, we revisit the highs, go to all-time highs. Probability of success, gets better and better as we creep to the upside and start looking more and more bullish on daily, weekly, monthly time frames. But this setup, this is what we want. Eventually, we want pot stocks to look something like this, where they retest the 200 exponential and simple on the daily or the weekly, start consolidating, and then we start looking for the massive gains. This is a very, very nice trade setup. Everyone should keep their eyes out for charts like this. And then when I ask for spot charts that you spotted that look good, request stuff that looks like this. So whoever requested this, congratulations on a good chart, good trade setup, and some potential for the transition. Because honestly, this is when we don't want to look at assets anymore, when they confirm into the bear market. And this is when we want to start paying attention to assets anymore. And during all this right here, we want to go to the beach. We want to travel to Europe. We want to smoke cigarettes and drink beers and whatever other stuff you want to do, but not give a shit. And then once this happens right here, then we want to, drink a beer, smoke a cigarette, and pay attention. But this is what we're looking for. And then especially when you see what makes this so beautiful is the fact that the daily is confirming into the potential bull market. At the same time, our weekly, obviously we don't have 200s on this, but at the same time, our weekly is getting that 821 cross. And essentially, I've explained this multiple times, but part of the beauty of the Fibonacci sequence and using Fibonacci numbers for moving averages and time frames and all that junk is that essentially the weekly 821 cross right here, which is our bull cross, lines up with our daily 200 exponential and simple, essentially confirming into a bull trend as well. So, nice confluence. Nice potential trade setup. I will anytime risk, in this case, I guess the main takeaway from this is by getting out when this confirmed bearish, which obviously you probably, normally you would wait for the 200 simple to roll over as well. But realistically, when you fell out of bed right here, you would have got stopped out. And this is already looking pretty damn toppy. And obviously we hit that fib extension target to the upside. And there was just a lot of reasons on this one. But even if you waited for the back test and then this to flip red, you were out at 1984 and you're not potentially getting a signal to get back in till 1554. So regardless, even if you didn't get stopped out and you just took the exit, you're talking about basically you avoided a 20% haircut and then you get to reload. And you also, not only did you avoid the haircut, but you avoided basically a year of negative, sideways price action. 317 days and 20% avoided. So you're like, oh, that's awesome. I avoided dead money and also I avoided a 20% drawdown. And that's assuming that you sold, in an unideal area and then you bought back in an unideal area. You could have easily sold up here when we put in a new low, and then you could have easily bought down here when we started putting in divergence or we got the 821 cross back to upside. And realistically, you saved yourself a year down or just dead asset and 37% downside. So you really killed it if you use this strategy. And that's why it's so beautiful. You know, and then obviously as it continues to move in our favor, becomes more and more bullish, probability of success goes from, oh, now we're counter trend trading to now we're trading with the trend. The next thing you know, we're putting in new highs. Then we're buying islands, you know, retiring, burning down the islands with tiki torches on accident because we get a little out of control. Who knows? I mean, shit could get crazy, okay? But yeah, I think that was it. That was the last of the requests. Very nice chart right here for UTZ brands. So thank you for whoever requested that. I can't remember. But it was one of the member group requests. Anytime you see a chart that looks like that, make sure you share it. That's what it's all about. But yeah, that's it. We made it to the end. I'm going to jump in the chat real quick, and then we're going to go ahead and wrap it up there. How did we do? 2:40? All right, yeah. So we kept it to an hour, so that's good. Well, an hour, give or take, you know, 3x. All right, so I don't know where I left off right here. Elon knows what's coming. That's familiar. All right, so... Oh, okay, so that was it. Oh, my bad. Parag, you did ask about that one. W equals Wayfair. Okay, I got you. I see what you're saying now. Thank you for reposting that. Yeah, and like next time just put like W equals Wayfair. But yeah, I saw the comment in there, but it didn't actually like register what you were talking about. And then what was the other one? CSGP. CoStar. All right, let's knock out these last two here. So let's go ahead and go out to a longer time frame. Check this out on the monthly. So obviously it looks really nasty. We see we have a low down here. We obviously have a swing through here with a massive capitulation wick. Normally we would use this swing for our retracement, but that wick is a little bit sketchy. So we'll see how this looks. So basically came back down to 786. You know, obviously a very, very, you know, nasty. I mean, just a round trip basically. You know, the difference between going back here, like, doesn't even matter. The chart's going to look pretty much the same either way. So you could go off either one at this point in time. Probably should have both. I would use the local one for now. We'll slap them both on here so we can look if one is like more important or there's like some super awesome confluence. I mean, I would say, honestly, even though, you know, obviously we couldn't draw it until the high right here. But looking back in hindsight, we see tons of interaction at the blue fib right here. Support, resistance, then support here. Support, you know, resistance, support here. You know, same thing just over and over again. So I would say the blue one is like definitely a substantial one. We don't see nearly as much support on the green one. Here, the 236 holds up a little. 382 holds up a little. 0.5x is resistance. 618 resistance. Almost made it to the 786. So it's worth having both of them here. Monthly, this looks atrocious. No signs of a bottom. Obviously, one good candle, which is good after like month and month of downturn. But is it just going to keep melting down though? I mean, this thing looks nasty. On the weekly, it's confirmed into a bear market. There was no backtest of a 200 exponential or simple. Very, very weak. Lots of overhead resistance now. Just hanging out in the bearish control zone. So many just false signals while it keeps going lower. No bearish divergence. If you go from this peak to this peak or trough to this trough, there is bearish divergence. But not between like these two. Yeah, I don't think this is one where you're going to find a good entry anywhere near what would potentially be the bottom. Now, it looks like it's trying to carve out a bottom for sure. It's definitely trying to. You know, I mean, it's been just straight trending down for a long time. Here it kind of chopped around and then went lower. Here it's chopping around and looks kind of okay. Put in some kind of like triangle pattern. I would just basically be looking at the fibs though. You know, we're at the 618 here. If we move up, it's probably to the green 618, then the 0.5. I mean, this is just as stair steps as it gets right now. Now, from where we're at right now, what would your stop loss be? Well, if you put in a new low, you want to get the hell out. 22% stop loss. So we need a trade set up somewhere with over 22% upside that also is likely to play out. Or we need to be not going by like the swing low, which is not ideal when we're like at the lows, consistently putting in lows. But this thing's got so wrecked, it's off the lows barely, but that barely is 22%. So upside back test from the breakdown right here is 125%. That's ideal. Realistically, one of the 0.5s would be 61% or 41% with a 22% stop loss. That's still like 2 to 3 to 1, 2 or 3 to 1. So it's almost acceptable and a realistic target. But are you just asking for it? I mean, shorter term time frame, daily bullish divergence. Again, you're just a little bit late to the party on this one, I feel like. Like, really, like, the triple bottom is the area to be entering this. Because you really need, like, this trade set up for it to be worth it. Which is, like, 4.5 to 1, which is great. The other alternative is, and this is probably what you actually have to do if you're not already in a trade setup or you're looking at a trade setup here, you have to just be super tight. Take that recent swing low, 13.6%, and then take the minimum upside target that you're looking for, which is that 0.5 in blue. That's 42% upside, 13.6 stop loss. That's 3 to 1. That fits the rules. It's a local swing, slightly off the other swing, but if we come back down and revisit the bottom again, just look for a re-entry at a lower price. We don't want to be in it. The minute this goes in our favor and gets above the 618 in green, you know, we want to move our stop loss back to the entry from down here up to our entry. So no matter what, if this just rolls over, we get stopped out, break even. If it goes in our favor, we just keep trailing it up, and then we look for those higher targets to play out. But again, this is, I mean, I would fully, if I was going to enter this trade, I would fully enter this trade assuming that my stop loss will immediately be hit and that we will go much, much lower. But there's something there. And it, like, if you know, if at any point in time we do technical analysis on this and then you're like, oh, actually, I did my own fundamental analysis and I have reasons to be extremely bullish on this. So I'm taking into account the technicals and the fundamentals, and then I'm making an educated guess or decision or whatever. That's completely fine. That's 100% fine. As long as you're fully acknowledging that you're using fundamentals and technicals for confluence. Usually when we're looking at this stuff, we're talking about strictly technicals. So you might have a really, really strong fundamental case and the technicals don't look great. So you're like, I can buy right here. I could lose 50% on this position. I'm still comfortable buying more or holding. And then eventually I will be right. And that's okay. You can do that. That's completely fine. The problem is if the fundamentals don't line up or you're not like a strong believer in whatever stock or crypto or whatever, chances are when it goes down 50% and you're just hodling, you're eventually going to give up because you're like, oh, this project's trash. This company's a zombie. Fuck was I thinking? Like, I quit. And then you end up selling the bottom, you know, or losing money. Even if you don't sell the absolute bottom, you sell lower and then you don't buy back in because you're jaded or you're stubborn or whatever. So that's what it's all about. So you can use fundamentals and technicals together, but if the fundamentals are bad and the technicals are bad, get the hell out of there. If the fundamentals are bad and the technicals are good, whatever. If the technicals are bad and the fundamentals are good, whatever. You know, that's fine. At least you have some belief in something. But when they both line up, it's much better. Okay, so, but there's also a lot of tricks that you can use to skew your fundamentals. So when somebody like checks the like surface fundamentals, they're like, oh, this looks good. And then really you're like, oh, wait. Or is Elon just like trading in and out of Bitcoin to like pad his numbers? Is he like actually cooking the books? Like, you know, and it's not like just Elon's doing that. He's just, you know, the richest, most famous guy that's doing that. Every company's doing it. Like, it's literally ridiculous. Okay, so CSGP CoStar Group on the monthly, we're taking that swing from back in 2009 all the way down here at $2.41. We're taking the swing to the upside at just shy of $100. Oh, okay, I was going to say, it's crazy we didn't make it to 100. Like, the probability once you make it to like 80 of going to 100 is like 95%. But it did. It went to 101. So that makes sense. So, yeah, once we got to the top here, so now we have macro fib from the bottom to the top. We have not come down to 236 yet. The monthly has obviously crossed bearish. The last time the monthly crossed bearish was back here in 2007. So we know this is another one of those charts that's showing us a 2000 bear market, a 2008 bear market, and then a 2022 bear market that is similar. And those are the only three examples. The other two were obviously very, very nasty. So we would expect this one to potentially be very nasty. If we look at the potential drawdowns, we can get a rough idea what we would expect based on past history. 61%. You know, and this is peak to trough, not like tradable. 61 and 73%. So from the high where we're at right now, you know, what are we talking about? Somewhere around like 25 to 35. So somewhere, you know, close to the moving averages, 200 simple and 200 exponential. So it looks like we're basically going to get a back test of a 200 exponential and 200 simple. Seems likely, you know, they either line up with the 236 at 41.54 or possibly as low as the 382 at 24.27, and then we can reevaluate. On the monthly, it's all red histograms, red slope line. Pretty aggressive knife stab down here. Stochastics are kind of bottoming out. Didn't make it into the bearish control zone, which obviously, you know, if it did, it would be a little more reliable as a bottom. So maybe it's just going to reset and then go lower. That seems likely. If we go to the weekly time frame, you know, broke below 200 exponential and simple, backtest consolidation. Looks like this, it looks very close. I mean, we know what's going to happen here. One of two things happens. It either goes sideways and then becomes a bear market on the weekly and then goes down, or it goes up, gets back above the 200 exponential and simple, and avoids the bear market on the weekly. So 67.52 is the area it needs to be above, or it looks bearish. It's building momentum, bunch of green histograms. It's consolidating here while the indicator oscillators trend to the upside. It's going sideways. Got to be careful that's not going to be a bearish reset. Now, again, probably pushes up here, back test somewhere, maybe even a higher high, but also I would expect a big knife stab to the upside, and then it roll back over. It really looks like it's coming down here to 41, 41, 41, 41, 41. No, I'm just kidding. 41, 41. Malfunction, malfunction. You guys thought the screen was stripping. You're like, I knew he was a robot. Always doing that same shit over and over again. So yeah, on the daily, I mean, that's what it looks like to me. We could easily backtest up here, even get above the 200 exponential or simple, but, you know, where's a backtest to? I think 73.66 or something like that. You know, and you guys know what I'm going to do here. You don't need me to do it. This is what we're looking at, is basically, you know, obviously we bust through the 382. We hit the 0.5, backtest to 200 exponential and simple. That seems like probably where we go. We could easily see a move up to the 618. So I would be looking at $70 to $76.68 as probably my target to the upside. Now, again, you know, you're talking about like 10 to 20% upside right here, 23% to 14%. Could it underperform and fail and roll over? Sure. And you're already so far off the bottom, you're not going to be able to take like a reasonable stop loss on this. So you have to say, hey, we broke above like this resistance. We're going to see continuation, or I'm going to get stopped out of this trade. So there's not going to be a good trade setup on this. If you're assuming you're not in it already, you have to say if we break below the 236 or we take out these swings right here, I want to be out of the trade, and there's not going to be any trade left. You know, this is where you would, ideally you would have it all the way down here, which sucks. New low. But even if we took these swings, that's 12% stop loss. That's going to be too much. So you really have to go, if we lose the 236 and this local swing low, I'm out. You know, and then realistically, if this thing underperforms and we see a weak move up, 7% stop loss, 12% target, not even worth taking. And then even if we see a nice trade, 23% upside, 7.3% stop loss, 3-to-1 risk reward. So it basically has to like max out performance just to be even like a takeable trade. So there's just nothing really there for me. Now, obviously, if we switch over to the weekly and we look at the confluence though, you know, we see what's taking place here. We basically have to get back above the 200 exponential or simple. And then if we get back above them, just to hit the 0.5 target, then we should be bullish anyway. So we're probably going to go up higher. So in all reality, it's like, do you take the trade setup now, or do you just wait for confirmation when we start closing above 67? I would say, you know, if it's 8% downside, 8% upside, or we just wait till the coin toss happens. And if the coin toss happens and we're bullish and we close above 200 exponential and simple, then we can just take continuation trade. Probability of success is exponentially better. So, you know, it's like, okay, here it might be a 60% failure, 40% success, but there's a little more meat on the bone. Here it might be 66% success, you know, 33% failure or 60-40, whatever. But there's less meat on the bone, but there's more likely we actually like are bullish. So again, it's just all about strategy. I would rather trade with the trend or have really high risk reward trade setup, because I'm giving up probability of success trading against the trend. So I need to get it back by risk reward. The same way as I can take a lower risk reward if I'm trading with the trend, because the likelihood of success is higher because I'm trading with the trend. And obviously we're at the end of the stream because I'm saying the same stuff I always say, but it is good to like drill it into your head. So that being said, position sizing, risk reward, probability of success, and then obviously most important thing is protecting our principal, preserving our capital, and then locking in gains. The gains will come. All we have to do is not lose money, and eventually we will make that motherfucking dough. And that being said, while we were paying attention to the charts, looks like crypto was acting like our little bitch and doing exactly what it's supposed to do, like a good little bitch. So when we look at the short time frames, Bitcoin has lost some key areas, and we are very, very close to getting our back test. So the back test area we were looking to hold up was around, I think, 22,250 essentially. There's a couple other areas, but that is where we're looking to potentially re-enter. And that's just about where we're at right now. So we will look and see if that back test holds up, and probably be back in another long on Bitcoin and maybe some of the other trash as well. But once again, Bitcoin trading very, very technically. Imagine if you have like, you know, the book already written out and you know what's going to happen, and you can only ever read one page into the future. So you can see the next page before it happens, but you only get to see one page in advance. That's like what our technical analysis has been doing for the last 2 years or whatever on crypto. So that's what we're going to keep doing. It's playing out beautifully. We're at another inflection point. We're at an SR flip, stop and reverse point, or a support resistance flip, or, you know, inflection point in the market, whatever, where short time frames are about to confirm bullish, and then we can likely get a retest back onto like the daily. But realistically, we could easily just roll over and continue the trend to the downside. And, you know we have our hourglass, and we know inside that hourglass, we can literally count the pieces of sand that are left. So if you're the stock market, there are like 5 pieces of sand left, because we know next Wednesday, Jay Powell is going to come out and give the market that dirty dick, that 75 basis point or 100 basis point hike, whatever. And if you're crypto, you have extra 2 days for the weekend on the spot chart. So you have 7 grains of sand left. So as far as I'm concerned, we have 7 days of price action continuation before I basically want to be back to neutral, like out of cryptos, whatever. Or at least only letting like some gains kind of float around for a potential upside. Because I expect the market is like, oh, we price in all the bad news. So then the bad news gets here. We get the bad news. The bad news is already priced in. But some people were thinking the bad news wasn't going to be that bad. Some people were thinking the bad news is going to be worse. So what's going to happen? You know, again, it's all about market expectations, what's priced in, what's not, and where the market is being inefficient. So in my opinion, downtrends in over 90-something% of assets and asset classes, I fully expect continuation of downtrends. So while we're looking at long trades right now and scalps and bull trades, the truth is we're looking to ride these longs back to the upside, and then we're looking to actually, we're kind of doing what we're not supposed to do, buying dips. And then we're really supposed to be selling the dips that we bought, and then also shorting the rips that we just bought and then sold. So realistically, the big positions are going to come back to the downside at our next rejection, as far as crypto and Bitcoin and all that. But in the meantime, we're looking for a quick little scalp off of that breakdown, that retest of the 382 and the 236 for a move back up to the 618 and the 382 for the fibs we talked about in the beginning of the stream. Which obviously, literally what we talked about happening is happening perfectly. So just keep doing what you're doing, Bitcoin, and we'll just keep taking advantage of you. But that's it for today. Appreciate everybody that showed up today. Thank you all for putting in the requests. Thank you all for likes, subscribes, all that good stuff. Make sure you share with your friends. Appreciate everybody that has told a friend about the group. We got some new group members. For all the people looking out there to join the group or interested in finding out about it, you can message me. I'll give you some details. You can get some indicators. You can be part of a group of elite, awesome fucking people that just love to trade and like meme stuff. But it's really all about learning and becoming a better trader, investor, etc. But we definitely have some fun in there as well. So, and it's always nice to make gains with people who are sharing in the glory, as opposed to just like making gains and then going to your wife and being like, babe, I just made 40% in 2 days. And she's like, great, thanks for sharing. And you're like, no, it's the perfect setup. You don't understand. And she's like, great, thanks for sharing. And then she's going to ask you to do shit like mow the lawn or unload the dishwasher or something like that. So you're better off just keeping to yourself, ignoring her and trading with the group. So anyway, that's it for today. I'm going to wrap it up there. Hopefully everybody enjoyed the stream today. Appreciate all of the requests, likes, subscribes, all that good stuff. But it is Wednesday, 11 p.m. Eastern Standard Time on 7/20/2022. And like always, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. And most importantly, we are at a key inflection point in the market. So we got to stick to the basics, trading with the trend, protecting our principal, preserving our capital, risk reward ratios, probability of success, and obviously responsible position sizes, locking in those gains and assuming that the trend will continue. But that is it for today, Crypto Trend Trader. And I'm getting the fuck out of here. Peace, y'all.